following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the first and hopefully first of many live episodes of the Option Block, and that is your cue to go crazy. There we go.
Thousands of people.
There we
here.
go.
Live from Chicago.
We can't fake that. Now everyone at home knows that we do indeed have a live audience. It's not just me, Sebastian, and Tusaw hanging out somewhere with making our own noises. But this is indeed our first of hopefully many live episodes of the Option Block. And I'm glad all of you could come out to this. Hey, at least it's nice and cool here. You're not getting. It's a wee bit warm today in sunny Chicago for our listeners outside the area. And we have a full panel. I think this is definitely the fullest panel we've ever had on the show. We had the live one we did at FIA, but that was live to tape without an audience. We didn't have anywhere near this many panelists on the show. So I'm just going to dive in and start going off to my left, politically, if not logistically, because I know, Rob, you're huge on the left there. Starting off.
Are you guys related? Just wondering.
Yeah,
the two of you.
He's a distant cousin.
You both have that beautiful goatee.
He's on that.
And that nice dark hair.
He's a distant cousin on
a couple of attractive men right there. That's what I'm saying. Holy bananas.
He's a distant cousin on that Russian beer side we were talking about on the recent episodes. But that was indeed, to my left, good old Big Rob Kurzakowski from Options Express. Rob, welcome. This is the first time we've actually done this live in person, me and you.
Yes, this is. I think that the last time I had to skip out when we did the live show. So, did both of you guys do the live show last time, or is it just?
No, it was just Tim. Just Tim. Tim was the lone man there. So it was a skeleton crew that day, but not today. We have the opposite of a skeleton crew, and next to Mr. Crazy K is good old Tim Navabi, Tim the ladies' man Navabi, with the quite the bouffant do going today. I didn't realize, Tim, you were so into the product today. But welcome to the live show, Tim.
Thank you very much, Mark. I'm very excited to be here, and very excited. I think
you look excited, and you sound.
Thank you.
You're dripping with excitement, sir. I can feel it. It's palpable coming.
He's going for the '90s Timberlake look. You know.
There will be a dance portion of the show later, so Tim can show off for all of us later. And then next to him is good old John Grigas, also of Options Express. So the three of them collectively will be holding down the OX seat today. Mr. Grigas, welcome back to the show twice in 1 week. I'm not sure what to make of that.
Yeah, I hope the listeners can handle it. But it is good to be here. It's good that we can drink beer and not lose our jobs while we're on the...
Officially. You know, Tusaw, Sebastian, and I have been drinking for ages on this show. You guys just haven't. You've been in your office.
But it is good to see everybody together. When we put this together about 9 months ago, it was the first time I met everyone. It's good to see everyone back together drinking beers.
It's interesting to see how far the show has come since those initial meetings there in the bowels of OX. Now we have a full complement of people here tearing it up on iTunes these days. I don't know. That was pretty crazy. We're up there with all that crazy CNBC stuff in the top 20. So it's nice to know that. I think it's Rob personally. I think Rob really is the one who's bringing the audience to the show these days.
I'm going to do my best Jim Cramer and just start
Go crazy.
Just going crazy.
Did you bring your soundboard? Sell. Buy. And then, of course, next to the OX cohorts, we have the greasy meatball, the Seabass, good old Mark Seabass Sebastian from OptionPit.com. Mr. Seabass, good to see you live and in person, sir.
Great to see you live as well. You know, every time I see you guys, it's been 9 months, and some of you, I forgot how good looking you are. Most of you, I forgot how ugly you all are.
Lovely sentiments from the Seabass.
It's like a Picasso painting here, folks.
We have your mic is ready on mute at all times, so we can just dial you back if necessary. And then next to the Seabass, we have a temporary guest. He's got to jet off in a little while, but we had to bring him in since he did such a valiant effort last week, one-handed and all. It's good old crazy Uncle Mike / Auntie Mike Kavanaugh / Grandpa Mike.
We keep trying to bury that moniker, but it just keeps coming back.
Hey, I like the fact that he's the older Mike of the two, and he's the aunt, and I get to be the uncle. I like how this works.
Either way. I think it would be more fitting for Sebastian to be the aunt.
I'd be more the niece.
As he's judging the appearance of men's hairdos. But great to be here, great to be on the live show, and very exciting. 1 year and...
almost a year. It's coming up on a year. We just did episode 75 on Monday, so it's kind of like a belated 75th episode spectacular. You know, like The Simpsons, they do like the 103rd episode spectacular. Yeah. This would be our 76th episode spectacular. We couldn't quite make the logistics work out to do episode 75 live, but 76 still important.
Year our country was founded.
Very excited and curious to know what a live podcast looked like. So
now you know.
Now I know. I didn't know what it was going to.
Now you can cross that off your bucket list.
There it is.
Things to experience before you die, there, sir. And then next to him, the other Mike, good old Uncle Mike Tusaw, back from the woods, back from his extended vacation, salmon fishing with his bare hands. Uncle Mike, welcome to the program as well, sir.
Yeah, it's good to be here. It's this big city lifestyle of actually being in Chicago. Something different for me. It's not like the mountains, that's for sure.
It's a little scary and intimidating for you, isn't it? When you
That's something. Are you allowed to carry guns in the city of Chicago? I keep forgetting about that.
This is like
I think you can now.
You can now?
Yeah.
You're allowed to say guns?
It was interesting. You know, we all got here, and most of us ordered our fancy beers. You know, I see some Newcastle. I see some Smithwicks. Mike orders a can of Busch.
Classy as all.
Busch Light.
Yeah, poured it out and then crushed it over his head. It was great. Created a sound wave off of the force. It's like a tidal wave.
I'll show you how we do it in the mountains here in a minute, Sebastian.
I've seen that movie.
Really? Yeah.
Brokeback Mountain.
And listeners, that other voice way down at the end of the table is good old Tony Batista from Tasty Trade. We were going to have Tom Sosnoff over from Tasty Trade. It would have been a great denouement moment having the co-founder of Thinkorswim on the OX show, but he had emergency dental surgery coming
That's
up.
his story. He's sticking to it.
And that doesn't really go well with talking on the radio. But Tony very gamely jumped in for us at the last minute here. So Tony, welcome to the program.
Thank you. I had no idea that this was a roast. But I appreciate you inviting me anyway.
It has that vibe. I told you to listen to a few of the episodes before you came on.
I did. I just
in case you were expecting Wall Street Week or something of that.
No. But I appreciate you bringing. Thank you. And Tim, if I know nobody can see you, but you really could explain humidity in Chicago here today with that dew you got going on.
We'll have some photos of the event that'll be going up on Facebook and maybe some video later so we can immortalize Mr. Navabi for all to see and hear. And now, Tony, since this is your first time on the show and your first time on the old Options Insider Radio Network, why don't we kick things off with you give our audience here and our listeners a little bit of an overview of your background in the options business.
Sure. I'm a Sagittarius. No, I'm just
I thought I felt strangely drawn to you. I couldn't explain it.
I'm just kidding you.
Hard not to be.
20-plus year veteran of the CBOE, just an independent market maker, and had a vested interest and a good relationship with Tom Sazza for the last 30 years, and we've started Tasty Trade now, which is a real financial network, similar to what you're doing here. We want to give everybody actionable things to do, actionable things to trade. I mean, one day I was watching TV and somebody came on a radio station or TV and said, you should buy Ireland stocks. Well, how do you do that, right? I mean, you can't, So what kind of call is that? So at Tasty Trade, we give you a live 4-hour show from 7 to 10 a.m. Central Standard Time, and then it's rebroadcasted 24 hours a day. It's a free show, and you can listen to it as you like. It is in HD. You can watch it on the internet just by going to tastytrade.com, and then on the back end, if you join and become a member, it's $45 a year. That's a couple of pennies a day. We give you some good discounts on financial services when our superstore opens, which is August 1st.
No, you had me all the way until you said I have to watch Tom Sazonov in HD. That's why kind of scared me off a little bit.
Yeah. It's not pretty. I mean, I didn't say it was pretty, but it is informative and fun.
Yeah, there's a reason why they brought Tony in.
Yeah. I'm the eye candy.
You're a good-looking man. I'm sorry.
Thank you. Appreciate that.
There's a reason I didn't bring my wife here. I'm just saying.
Well, I was better looking a few years ago. Getting old now.
That
I don't like where this is going.
It is, how would you describe it? It is part roast, part options information, part infotainment, part all sorts of fun stuff. But we try to mix it up here a little bit. And
we call it edutainment.
Edutainment, there we go.
One of our goals every show is to find an exact period of time where we know they're going to cut out what I say. So...
Half the time he does it himself with that headset he uses, which just kind of clips out, and then when he gets really excited, that's when we know. And his own headset cuts him off. That's when we know he's saying something that would just never make it to air, even if we could hear it. All right, and with the panel assembled and our guests all ready, we're going to dive right into the trading block.
The trading block.
All right, and welcome to this live trading block, and we're going to be scrambling for live details down here since we are in a completely signalless area of the venue here. But it was indeed a bullish day on the street again today, as we saw with all that love coming out after the Greece default was allowed to go through, and suddenly the market was happy again. And we closed today, the Dow up 152 points to 12,724. The S&P closed up nearly 18 handles to 1343. And the good old NASDAQ, ever the laggard these days, but now is faring fairly well, closed up 20 handles to 2834.43. And I don't have the latest on where the VIX cash closed, Sebastian. Do you have anything on that off the top of your...
I think we said around 1750, 60, something like that.
It was a day where Greece seemed to lead the way. We had a lot of ebullience coming in off of that Greek deal coming in. We also saw, we talk a lot on this show about the relative importance of economic indicators. And we, of course, had jobless claims this morning. They came out. They were a little bit higher than expected, and the market pretty much just shrugged them off, as they have pretty much most of the indicators over the past few months. It just seems like the numbers really aren't lighting up the tape. But before I dive into it anymore, let's just kick it off here. Mr. Seabass, what was catching your eye today in the trading block?
Well, one of the advantages of sitting in front of the screen all day is you can kind of see these oversold and overbought moments of the day. And I'm looking now. The VIX closed 1765. At one point, it was down. It was near 17. We were really, really off as the market was running up. And then people looked and said, okay, maybe we've oversold a little bit of premium here. When the VIX was down about $2, I was looking at SPY. And SPY and SPX, you could buy the at-the-money straddle, and that straddle encompassed less space than the SPX had moved since Monday morning. And I just said, okay, no way, done. So I bought some straddles, and then Tony and I were actually just talking about VIX. Tony was looking at VIX. What did you think today, Tony?
Yeah, I agree with you. I agree with you that volatility is cheap. I just have a hard time. I know you like to buy volatility. I have a hard time buying volatility because I just can't get paid. I mean, if you're going to look to just buy puts, it works hard for me. If I was going to trade the VIX, I'd be looking for like a at-the-money call spread. That's what I would trade. I definitely would not calendarize VIX because of the complications there, and I think
It's foibles.
Yeah. I think it's a discussion for another day, and it's pretty complex. But I would stay in the front month. And if I was to, I think the VIX with the open interest and everything they have now, that's become the new volatility play. I think that's the way to get paid.
So spoken like a true degenerate floor trader, like most of us up here on the panel today. When in doubt, palms out. That's the way all of us were trained. Mm-hmm. And you don't make money buying insurance, you make money selling insurance. So
yeah, I mean, the VIX actually, one of the neat things about the VIX is that that forward skew it has, much like oil or some of the other trades. So when volatility gets really low, you'll find that rather than buying outright calls, call spreads and even call 1x2s are a much better play than outright calls, just so you can take advantage of kind of that volatility skew that, you know, even if you talk to some CBOE people, they'll admit maybe it shouldn't be there as much as it is.
Just maybe.
Sure. That's a good point.
Well, we'll see some of that in the old odd block, too. People using ratios and put sales to finance call purchases and all sorts of fun stuff. But I know, Auntie Mike, you do have to leave in a relatively short amount of time. I'm glad you could swing by and honor us with your presence for a few minutes. So why don't I give you a chance to discuss what was lighting up your own personal tape here today before you have to go.
Yeah, I mean, the thing that I've noticed, and you know, if you talk about the VIX, and I don't know if it's indicating what it used to. You know, it seems that there's a disconnect between the S&P and the VIX. I don't know if it's because there's been efforts by certain groups saying that volatility should be treated as an asset class. Certain parts of your portfolio, 2%, 3%, 4%, you know, whatever, depending on the group, saying that this should be included in your portfolio as a hedge against downside movement. And when you get an open interest in an exchange-traded note like the VXX, there's certain pressure put on a monthly roll. You know, an algorithm, you know, for every 250 shares of the VXX, you have to open one VIX futures contract in the forward month, and then every 10 days you roll it out from the one month to the next month. And, you know, as a former market maker, we know how to read prospectuses. You know, we know when the dates are that these things have to be rolled. You can't tell me that there isn't a disconnect because of the market making capacity in that ETN versus the VIX futures, VIX cash, VIX calls, anything relationship. So I don't know if I'm watching the VIX as much as to get a sense of the volatility is just looking at the money, you know, on what you're trading, you know, looking at the straddle on the in the front month. But the other thing I've noticed with the market right now in general is you're getting a lot of the big moves overnight. I think we came in, the market was jumping around a little bit this morning. It was down 4, up 4, down 4, and then by the time I got off the train to the office, it was up like 16, and it stayed there. You know, you had a little sell-off in the afternoon, about 4 or 5 points, and then it came shot back up. It just seems to be disconnected. If you're not in on that big move in the morning, it's watching paint dry.
You missed it. You might as well go home.
Yeah, where I'm going now. So thanks for having me. Good segue.
Well, before you go, I know let's hit one other thing. I know you were talking up quite a bit last week. Has had quite a move even since we talked the last. Of course, your darling there, LNKD. I know it got down to the 97 handle range. Have you gone to the dark side? Have you gone back in?
I haven't. No, it's a good point because I was talking up to 97. I think when we got in last week, we got in below 97. It shot up 2-3 days later, and we got out. And you know, I told George, who's in the audience here, who is he's the LinkedIn expert. I looked over at him. I said, "Hey, I'm bullish again if this thing gets back down to 97." He kind of looked over at me today, and I'm like, I don't know if I like it today. It just got downgraded. I don't know. So
it's had like a 40 handle range over the past month, from like 70 up to about 110 or so.
I'm still watching it, but you know, I guess maybe that's why you're calling me Auntie Mike. You know, it got back down to 97, and I stepped away, but I'm still watching it.
I saw it hit that level, and I was like, oh, he's in. He dove back in. I've been watching it.
And, you know, an hour later, it was trading at 102, so I probably should have got back in.
Well, and I think instead of using the term watching paint dry, Mike should use watching an apple pie cool on the windowsill.
Oh, we're getting into it. We'll get to Apple. We will get to Apple.
And just to Mike's point about the VIX, I really agree with him. That's one about the VIX as an asset class. Another thing that I think is, and we've talked about this in the past, is reducing the effectiveness of the VIX as an indicator are weekly options. Because, as you know, after 7 days, options on the S&P 500 are no longer included in the VIX. So you've got these weekly options that allow you to trade event risk, and you've got a volatility index that doesn't measure those weekly options. That disconnect there, I think, is causing a real problem in the way the VIX is calculated. They're going to have to, maybe not now, because weekly options are only, 5% of the SPX, but a year from now, 2 years from now, I think they're actually going to have to readjust how they calculate that product.
Yeah, no, it's a great point. And, they're even talking about rolling out daily options, So it's going to be a full-blown, I mean, it's already a gamma-rama in that last week. I mean, it's going to be a full-blown just...
Gamma-holic?
Yeah, I don't know, watch out at, those dailies.
Well, Auntie Mike, then, one more before you go then. You interact with the, with these retail people who are all across the spectrum, from beginner to people who are a little bit more advanced. The ones who seem to know a little more, are they coming to you? Are they sort of buying into that VIX hype that it is a downside hedge? Are they looking to you saying, hey, let's add some VIX, let's add some volatility components to my portfolio? Are you starting to hear more of that?
Yeah, the people come to us in the ones that are asking questions about it. We tell them to. I shy away from the VIX. I mean, you're trading options, which are derivatives, right? The main component of the pricing of that is very hard to understand, the volatility. So when you start trading the volatility on the volatility and you put that in a portfolio as a retail client, you lost me. I don't want to be the guy that spends 99% of the time of my day educating somebody how to trade volatility on volatility.
We do.
Yeah, that's my job. Yeah, no, there's market making firms that they pay good chunks of dough to hire a PhD in financial math and a programmer that has the equal kind of credentials, and they put those two guys together to come up with a super team that builds software that makes markets and volatility on volatility. I'll let them play that game, and we'll sell some calls and collar some equity positions.
Yeah, and on top of that, just to add to what Mike's saying, if you by buying calls on the VIX or using the VIX as a downside hedge to a stock market position, I view it as it's like buying car insurance on your home. Yes, there is the inverse correlation that exists a lot, but it's not always going to be there. And if you're going to buy a put, buy a put. That's what I say.
A lot of the studies I've seen show that the futures themselves are probably a better portfolio hedge consistently. Doing some sort of rolling 3, 4, 5 month out type of trade to kind of relieve as little of that contango cost as possible. That's a much better hedge than just straight up going out and buying calls.
Well, hitting on the futures tip, then I want to. I'll toss this over to Tony. Tony, I don't want to cause any problems at home here, but
sure.
But Tom was on one of my other shows a few weeks ago, the Volatility Views show, where we discussed a lot of volatility trading ideas and strategies and that sort of thing. And he made an interesting and somewhat controversial comment when we were talking about VIX futures. He said, I'm not sure if you had a chance to hear the show, but I asked him what he thought about VIX futures, and particularly in the retail context, which is where you guys are operating a lot these days. And he said he thought VIX futures...
No place for the retail investor.
Yeah, he said he thought VIX futures were irrelevant for the retail investor. So I'm curious. Hey, Auntie Mike, thank you for showing up. I'm glad you can make it.
Thank you. Nice to meet everybody.
Just to let the world know, your pinky is mostly healed, so the cards and letters and money can stop coming in. You're all right. But yeah, Tony, like I said, I don't want to cause any rifts at home, but what do you think about that statement that VIX futures are essentially irrelevant for the vast majority of the non-professional audience?
Well, I'll back it up this way by saying over the last 10 years of seeing many, many retail accounts, of all the retail accounts that we've had to liquidate, VIX options and the VIX play was probably the culprit in the vast majority of them. So if you believe that, then you have to say that it's not the place for the retail investor. Now, that being said, a lot of them were calendar spreads, and you can do them for credits, meaning sell the front month option and buy the back month option and do it for a credit. And then people think that they see something, doing a calendar spread for a credit in a stock might be something that you'll never see. But doing it in the VIX, you may see quite often, and that's where people it can get inverted and stay that way for many dollars.
Yeah, because it's technically two different underlyings.
Yeah, technically two different. That's why I say if you're going to trade the VIX, you want to stay vertical, and you want to either buy a call spread if you think the VIX is going up, or sell a put spread, that kind of thing.
Well, I think that in that respect, that he does make a really strong point. If you're going to trade a product, I'm shocked, and I've said this a couple times, I'm shocked the number of people that will take the time to read the directions on a Kraft macaroni and cheese box, but then will go in and just trade some obscure Vicks product.
Well, you can burn yourself making mac and cheese.
Yeah,
There's an immediate danger.
I've got a kid. And I was in college. And yet they'll just go in and just trade something without even thinking.
Well, with the efficient markets that we have today, I mean, listen, I started back in 1983, and we were making markets that were $75 wide, and the customer was really happy with them.
Must be nice.
Now you have a market that's 1 penny wide, and you see something that you think is mispriced by many dollars, you're probably wrong. Okay, as the retail investor, and you shouldn't make a large bet there. So.
All right, so let's rope in the OX cohort then. He mentioned that VIX is, I think Tony's words, to quote him specifically, were VIX is blowing people out left and right. So just so any SIBO people here, they can pin that on him.
I don't know if I said that.
But do you OX guys, do you agree with that? You see a lot of most of your I guess account liquidations coming on the VIX end of the spectrum these days?
I wouldn't say account liquidations, but we get a lot of people that they do the calendar spread and they can't understand why we have to hold full margin on their short leg. We see it probably more even in the OEX, where they're like, oh, look at these premiums. They got these huge premiums here. I got no risk whatsoever. They learn about assignment the next day, and then they're like, okay, just go ahead and exercise my long call. And you're like, well, let's see what the OEX closes at today. So, I mean, the VIX and the OEX, I mean, we really slow people down when they call in and try to get them to understand it, get them over to the SIBO website, get them to the education center, and teach them about it, because you're right. If they think it's too good to be true, or it's a win-win situation, it's usually not that.
Do you really want to send them to SIBO? Let's not forget, I taught the class.
We promoted that big time.
I know you did. I really appreciate that, actually.
Scary as it may be, but and we talked about it before a little bit on the show, but we can dive into it again then. Are you seeing the calls still coming in from people like we talked about with Mike over there, looking at the VIX as some sort of surrogate for a downside hedge, and not instead going to S&P puts or the like?
We actually see quite a bit of diversified trading. I mean, we see a lot of traders actually do quite well trading the VIX. It's the level of self-education. The SIBO has a lot of educational material. A lot of it's geared toward the institutional trader and the larger trader. But people that really do take the time to learn the product, they do quite well. As far as the downside hedge, I don't think we're seeing quite as many people buying insurance. In that regard, I think we're seeing a lot more people buying spider puts.
Oh, yeah?
Buying other types of products.
So they're listening to the show then. The message is getting out.
And one thing that our site actually does is it blocks people from buying those options that look like they're trading for under intrinsic value.
Oh.
So you have to actually call it and get.
Are you still getting that call? Why are these? Because the VIX futures versus cash, that still comes in a lot?
Yep.
Yeah. Well, I think we could kind of sum it up this way. VIX-based products can be, for the retail trader, one of the most profitable types of trades. And like anything, the trades where there's a ton of losers, the winners usually make out really, really well. So those that actually take the time to educate themselves are going to be somewhat pleased with the results, I think.
And where could someone find such education if they were so inclined?
Well, you could go to Option Pit.
So you guys throw softballs on this panel.
No, but a firm like Tasty Trade, I'm sure they talk about that type of stuff all the time.
One of the recommendations was a VIX play, wasn't it?
There you go.
You are correct. Yes, one of the recommendations a few weeks back was a VIX play. Yes. No. Listen. I'm an old OEX trader, so I don't want to say anything bad about the OEX. I mean, I trade the OEX for almost 20 years as an independent market maker. It's a great product, just like the VIX is a great product. Just understand the risks and then use it accordingly, and it's a part of your portfolio. That's all.
I do want to mention before we keep going here in the trading block to our audience here that we do have a microphone set up right over here. It's not just for show, so feel free if you do have a question about something that we're talking about on the panel or something coming up, feel free to come on up and ask a question. We have a whole table here full of fun prizes and giveaways, so if you ask a good question, you might win something fun. So just letting you know as the show goes on.
And ladies, Tim Navabi.
An evening with Tim Navabi.
Tim Navabi is available. He is available.
You'll have to pay for the dinner, but Tim will go with you there.
Yeah.
All right. Of course, there was some other big developments this week in the market, and I know Uncle Mike one of those in particular was pretty close to you. I'm not even talking about the metals. I'm talking about that fruit company you love so much, and they had some earnings this week. So how did you fare on the old Apple earnings this week?
There was a whole lot of grinning going on, mostly by me. We did well. What we did going into the earnings announcement, typically we collar Apple, meaning we buy protection to the downside by buying a put, and then we sell a covered call to finance the cost of the put. But going into the earnings announcement, we left the upside open. So we were long the put and just stayed long the stock. And obviously Apple did really well with their earnings announcement. And the following day, what we did, we locked in the profit. And so we sold the October 325 put, and then we put on an August 375 400 collar just to lock in some profit.
You love that 325 protection level. That's the high protection at the Know Your Options office.
Hey, Mike, just out of curiosity, I usually just spend my time looking at straddles all the time. What is leading into an earnings play?
What was the expected move? What was the expected move of Apple going into the earnings?
Yeah, it was like $20.
The weekly straddle is about $20.
Yeah, what is the collar cost on that? Because I'm interested in how smiley that skew gets.
After the earnings or before?
Before.
I didn't even look at it.
You didn't even look.
No, with it, what we did
going up, right?
Obviously, everyone knows Apple's going up. What we did going into it is that, and this is more of a longer term play. This is just to enlighten the audience, so to speak. We're bullish Apple for many, many years, and we're using calls and puts as a means of hedging it. And going into the earnings announcement, we had just come down. When Apple came down, we were short the 360 covered call. We got out of that like a nickel. And then as it was going higher, what we were doing is we rolled up the put to the 325 level, and it was running, so we just continued to allow it to run, so to speak. And then following the earnings announcement, we reestablished the collar.
Good stuff. Stuff. Yeah, I mean, it moved. It was funny. Straddle was $20. Apple had closed like
76.
Yeah, 76, and it got up to 397, and then it was unbelievable. They were dead on.
It was 405.
Got over 400.
Yeah, I got 405 right away.
In after hours.
Yeah.
It wasn't. It's not.
That gets up to a good.
Well, Joe Terranova told everybody to buy that.
Really?
Yeah.
We talked about this, and I think it really stems back, and I think you have to look at what Google had done the week before, and I think you had to respect that move in Google and say that the move in Apple was probably going to be to the upside stronger. Again, we just look at risk reward at Tasty Trade, and we think that if the risk is greater to one side than the other, then that's the side I want to be on. And I agree with you that the risk was definitely the upside. But when you're looking at and we figured it out to be an 18, 19-point move, you say a 20-point expected move, I'll agree with that, that's fine. So the 400 calls, the weekly calls, were trading for $3 at about 12 o'clock in the afternoon before the earnings came out. So we actually sold those at $3. Intraday, the stock's still at $3.76. Those calls were trading $2.20, so we just bought them back. And then just to make a point to the audience, we sold some more calls at $2, just to show you that if something is expected to do something. Now remember, we didn't sell the put because we're going with and again, we thought Apple was going to have good earnings, or at least perceived to be good, and the stock would go up. But we didn't sell the put because we figured the risk of the downside was so much greater. Apple had a great move already to the upside.
Totally.
How much further is it going to go?
Yeah,
so if I could sell a call outside the expected move, and again, that's not for everybody. Maybe you should be spread if you don't want to be a naked call, if you're a retail investor, you're doing this in your IRA. But we picked the level of 400 because we figured that was the expected move. It was outside the expected move. And then sell that call. And that morning, the call opened, I don't know, maybe $1.75, but it had a market that was $1 wide, and within a minute or two it was trading for 50, 60 cents, and then you cover it again. I mean, that's how we look at it. But
that gets into a good point about Apple, too, and we hear it all the time on Options Insider, and people are writing into the show a lot, talking about those premium levels, and we hit on a little bit on the show in the past, too, about coming in and trading those straddles for retail and how difficult it is on the long side, because that weekly July straddle went out the day before, or the night before the earnings, at about $20. And so, but if you were a retail and you bought that, anticipating a greater than that $20 move, you essentially have to be on your toes in terms of really knowing your gamma scalping to make that work effectively. That's one of the reasons why we've always said on this show to maybe pull back from the long straddles type of trades for retail because it is so difficult for them. Unless you went in the after hours and sold that 404 level in the stock, you got buried on the straddle.
High tick,
Exactly. Because of course everyone does that. And so if you're the retail guy loading up on that straddle and then watching it in the after hours trading 404, and the stock I think opened up at 397 the next day and then got down to 387. I mean, you got buried on that $20 straddle on that 375 line really quick unless you were a little bit more nuanced and knew when to get those gamma scalps in effectively.
Yeah, and I just, a stock like Apple, very rarely does it make sense to play the earnings on a stock like Apple, where people are so irrational.
Especially when it was up, what was it, up $8, $9 the day before?
Right, and it was up $70 into earnings.
Yeah, you're right.
Yeah. The one thing that scared me about them coming out with their earnings, they were going to talk about new product development too, right? I mean, they were going to talk about earnings. I mean, if you're a company and you're coming out with earnings, especially a company like Apple, but yet you needed something else to trump your earnings, it was just sending me a signal. Now, again, I was bullish on Apple. It was just sending me a signal like, you know what? I got to be a little bit leery here because if you're coming up with something else, you would save that for another day, right? I mean, if you want to save that if you got good earnings and you've got good product, you probably want to say, next week I want to announce it, right? I mean, I don't want to trump my earnings. So that was the one little tell for me that I was thinking, maybe it's not going to explode.
Right, and the one weird thing about Apple, and this is partially taken from Jeff Ogden, the volatility that it reads is wrong because it is such a trendy stock that a lot of times the realized volatility will read 15, 18%, but 15, 18% in one direction adds up to a period volatility that ends up being much higher than where the straddles are really pricing. And so it's just, yeah, I mean, it's one of those, it's, you're in trouble if you do, if you're in trouble if you don't. See?
Unless you're on the 325 line like Tucson.
Exactly. Unless you're on the Doc 325 puts, then you're money.
That's right.
Always playing it safe over at Know Your Options. I like it. But of course, speaking of tech names, we also saw another big name this week, Intel, kind of on the other tip than Apple, not exactly lighten up the tape. I'm an old Intel market maker, so I have a little bit of an affinity for Intel, even though it hasn't really moved much over the past decade or so, predominantly. But it wasn't. Aside from Apple, it seems like the tech boys weren't really lighting up the tape. Rob, I know you're a big tech follower. Were you watching the Intel earnings at all as well?
Well, Intel has basically become like Microsoft. I think we're going to talk about Microsoft here in a few minutes, and it's become a blue chip company. It's become kind of a slow growth company. I mean, it's the Walmart of the tech companies, where their product has become so commoditized that there's really no upside surprises. There's probably not a whole lot of downside surprises because outside of their chips and AMD's chips, there's really nothing else out there.
It's funny, you think of Apple as this sexy new tech name, but they're as old or older than Microsoft. And you think of Microsoft as this stodgy, old kind of also ran. They still make a lot of money, obviously, but their stock, another one like Intel, hasn't budged in pretty much a decade. I mean, compare them to Apple. Obviously, Apple's trading about 300. Intel, before the earnings this week, their weekly straddle was trading at 85 cents. I think last earnings, the stock went out at 26.71 before earnings, opened up the next morning 26.55. So they had a good 16-cent move in there. So not exactly lighting up the tape these days over at Microsoft. Kind of the polar opposite of what we're seeing from Apple, where people are just they can't buy it. They can't buy it long enough.
Well, I'm waiting for Apple to come up with an Apple IIe app for the iPad, so you can play Where in the World is Carmen Sandiego, Oregon Trail,
Oregon Trail. All you need is Oregon
Stand. You have no idea how many times I died of dysentery.
But kind of getting back to Microsoft and how they differ.
What, you don't want to talk about dysentery anymore?
The dysentery block is next.
But I mean, if you kind of look at the timeline of products, Apple releases iPad, Microsoft comes out with the Zune. It's kind of a dud. It's a great product, but it's not as sexy and appealing as the iPad. Then Windows Phone.
Hey, that brown Zune was pretty sexy. I don't know about you. That was a pretty sexy piece of equipment right there.
But they kind of just stay a step behind. I mean, Windows Phone 7 is great OS compared to Windows Phone 6 or Windows Mobile 6.5, but when you're competing with companies that are really innovating at a rapid pace, I think Microsoft kind of needs to go back to its roots and just kind of cut out a lot of the bureaucracy. It's become too big and bureaucratic unless they just want to stay a slow growth company.
Speaking of Microsoft, they are coming out as we're doing this show. I don't have any signal on me right now. Does anyone have the
I'm waiting for
the result? You're waiting for signal as well. That's what we get for doing it here in the bowels of Chicago. No signal.
I've got somebody on it.
Yeah, do you? Can we expect a whole another 15-cent move in the after hours from this one?
Yeah, well, Tony and I were talking before the show started. The straddle went out, 80, 85 cents,
Yeah.
and we were kind of laughing about different types of plays.
Sold 85 cents.
Well, no, it's just hard to get excited about something that's had a $6 move all year, top to bottom, or something like that, or $10 for the last 5 years. I mean,
probably like a $6 move over most of the last decade. I would say,
I mean, it's just, I don't know. There are so many other things to do.
Like sell those 325 puts there in Apple. Speaking of Uncle Mike and here, I know you obviously. How was the BBI today? I didn't get a chance to ask you.
Not too bad.
Not too bad. Oh, good to know.
We're good.
We won't illuminate that for our live audience. They can listen to the old shows and see what we're talking about. But of course, how was? Let's dive into our little metals commodity rundown here then for the audience. Obviously, SLV, GLD still on the rampage. Corn moving quite a bit as well. So take it away, sir, Uncle Mike.
Well, with gold and silver today, we pulled back a little bit, and we've just been rolling up the puts on that one for, ever since the rally began a couple weeks ago. Pulled back a little bit, and I still think I'm curious to see if gold's going to continue its run going into this debt ceiling announcement that's coming up. What I thought was interesting today is it's kind of like a Howie Mandel market for when it said that. On CNBC, it says there's a deal out right now, and then all of a sudden after that, no deal. So it's like deal or no deal. What's going on? But
you guys still heavily collared out there in all the metals?
We're just long puts right now for the time being.
That's right. You took off the upside.
Took off the upside for the time being, but we've been rolling up the puts and just riding it up, seeing what happens with all these announcements.
And Mr. Grigas, we had some action there in the corn today. I know CME playing around with those. Price limits again, and they're causing some interest.
And they sold off, right? I think I mentioned that.
Finally, corn selling off. What a surprise! Well, so you were picking that already on Monday's show, and you said you saw all the thick crops out there.
Tucson, took some road trips, and we were out into the
your inner ag analyst there coming out.
Middle of the grains, and everything was looking good. So I think both of us took an opinion about shorting corn on Tuesday, and I think it's been down. Both days since then, and I went long that day too as well, which was.
Are you still long?
You fixed my mic that day. You said this thing can't be right.
You still long equities? You still long?
No, I went short today.
Okay, I was going to say. Otherwise, I have to boot you off this panel. That just don't know who you are anymore.
I hit my limit, and they cut me off. So.
Well, it's funny. We were talking about weekly options earlier, and now the CME group is trying to get into the weekly options on corn, and that's kind of when you have. You probably have too many premium sellers out there, and is when you're starting to see all these new products that, weekly options on corn are not really geared toward the commercial hedger. They're out there for the premium seller and the person that's trying to hit a home run on a USDA report. So
the corn is just a place. But
I'm sorry. The Merck actually did the weekly options in a much more thoughtful manner than I think the equity exchanges did, because what they have is options that expire every week. They don't have weekly options, so they list them 1 month out and then expire. Constantly listing ones with 30 days to expiration, as opposed to the SIBO where it's like, we're open, we're decaying, it's the weekend, we're expiring. So they actually gave. So it acts like an option. I read. The price behavior of the weekly options on equities relative to a month option that has a week left to expiration, it's astoundingly different. There is a major difference. And what the Merck did in the way they developed this is kind of take out that opening on Thursday, sell. Sounds like a fight song, doesn't it? Opening on Thursday, sell. Buy, back Friday. Buy.
One of the other new shows we have on the network is, of course, that long and short of futures options that we do with the CME, and we did that first episode last month, and we discussed that exact topic on there because we got into the weeklies and kind of the difference we're seeing in the trading style and the performance of the products on the futures option side versus the equity option side. And you're exactly right. Equity options mean the second that bell rings, bam, people are hitting those bids until the weekend comes pretty much. And you see a little bit of a pop and then we're right back down on Monday. But on the futures option side, they actually seem to be using them more, I hate to say appropriately, but the way they were, I think, initially intended. In fact, I know I talked to Tom on the other show about this, one of the reasons he helped to create the weeklies was for hedging and trading around earnings events and things like that, not perhaps just to feed degenerate premium sellers all day. And that's that's kind of the way they devolved. But on the futures side, they're still using them. I mean, the bulk of the liquidity is not happening on the morning they're listed where everyone's hitting the bids and then buying them back that Friday. They're really kind of using them in a little more, I hate to say nuanced, but nuanced way. Yeah.
You bring up a good point. Tom did invent the weekly options, and we at Tasty Trade are going to put a statue up on every corner in Chicago of Tom, so we can thank him. We can thank him for that.
That's as good as watching him in HD.
He gets enough recognition. Yeah.
Will it have the beret or?
Yeah. Come on, it's always going to have the beret.
I expected you to come sporting the beret as well, just to keep the look alive.
Right.
If you see me with a beret, things have gone horribly wrong.
That would be a crime against good hair.
Horribly wrong.
Man with hair like that should flaunt it and show it.
We should get Tim a beret.
That is a quaff. That is a quaff to die for.
Tim just needs a little product down there. He'll be fine.
Well, that's about going to do it for the old trading block, unless you guys have something else you guys want to throw in.
I just want to talk about crude oil.
Oh, yeah.
We're kind of creeping toward the $100 level. Crude's been kind of mired in this $95 to $100 range for the month of July so far. But the OVX, the OIH volatility index is actually at about 30. So that's kind of where the support level comes in. If there's a time to get long spreads and probably not be a seller of crude premium, this is probably the time.
That's right. Refresh my memory if you're wrong. We discussed it on one of the most recent shows. Didn't you have a strangle you were pushing there in the big options on oil?
Well, actually, last month I had a strangle out there. It was actually a 103.92 strangle in.
That's right. Yeah.
In
you
crude.
You wanted to short it, by your call.
Yeah,
yes.
Sure. I wanted to be shorted, but that's when the OVX, the volatility index on oil, was a little bit higher. I think we're a little bit cheap on vol. This may be a time to maybe do a little back spreading or possibly get into a bull call spread if you think that it's finally time to break out.
I think, as I recall, Uncle Mike and I were aghast at the brazenness of your premium selling there out there in oil. I liked it. It was a little. You're mixing it up a little bit out there.
Courageous.
Can I put you on the spot here? Oil's right around 100. Buy or sell?
I think once we have a resolution here. With Greece, now we're starting to see we have 7 consecutive weeks of drawdowns. We have this big disconnect with Brent crude and WTI. I think that we're probably going to break through here. I think the dollar is probably going to take a little bit of a beating coming up.
That was long, right?
But, that is long. Yeah,
like a true politician.
Well, exactly. Yeah. That was a nice politician's answer.
Well, I was inspired by Bernanke's recent testimony of that speak and hedging myself.
Well, I think oil's been tracking the market, and the market's been tracking oil. I mean, they've been following each other pretty much hand in hand. So, I mean, if you're bullish on the market, you have to be bullish on oil, right? I mean, I personally think we're going to break out here to new highs. And for those who don't know me, I'm typically a perma bear, and this is one of the first time when the E-minis are up 20 points and I wasn't short, so I don't really know how this feels. Maybe that's why I'm in a giddy mood. So, but I mean, no, I think we're going to break out to the upside. But I will say one thing. I mean, do you look at XLE at all, or are you strictly commodities? I'm sorry, I don't know you personally.
I'm more of a strictly commodity guy.
Okay, so I agree with you with oil, but I would actually play XLE, but I would like to sell a call spread in XLE because I think now XLE, for those who don't know, is just a ETF, energy ETF. It looks like it has made like oil's like kind of in the middle of its range, higher end of its interim range, but in the middle of its range, right? I mean. So I think XLE is at the higher end of its range. So if you want to be a little bit of a contrarian, that's kind of what I am. And it just tells me I've got to push something out there. I'd like to sell an out-of-the-money call spread in XLE, like the 81 82 call spread for 33 cents or 34 cents, something like that.
Yeah, one thing that you really see a lot of is the eternal crude oil bulls. Whenever oil takes a beating, they'll flock to the oil services stocks, and kind of play them longer term. So, with oil having that big correction a couple months back, I think that maybe some of these oil stocks got a little bit bid up at the moment.
That's a good point.
And shifting gears toward the equity market, I think that bonds and the E-mini have kind of had this inverse relationship where whenever bonds get to the point where they're too high, where the yields are too low, you see that the substitution effect. And I think that that's really a big reason for this whole stock market rally is basically people staring at each other asking, well, where am I going to put my money? Am I going to put it in dollars where they're depreciating? Mm-hmm. Commodities where maybe it's unknown for somebody that's an equity trader, or you got to play a market that and get into equities. So sure. I think that dividend-paying stocks have kind of been a substitute for bonds, and so I think that now that bonds kind of got a little bit maybe toppy.
If anybody and I don't think you're not suggesting going long bonds, right? I mean, I think you were making the contrary, right?
Yeah.
And I agree with you 100%. If anybody can make an argument, I think the only argument you can make for buying bonds at this level is if you think the market's going to crash. I mean, and by crash, I mean like an 87 or a 2000. I mean, like a real debacle.
Or the commissions that Goldman can make off of them if you're a Goldman.
Well, I don't want to talk about the evil empire. They might be one of our channel partners someday. But no, I mean, really, there's no other reason to buy bonds here unless you think we're going to crash. And I don't think we're going to crash. I think we're actually going to go to new highs or stay higher. So.
No, and actually, bond option volatility is actually pretty low right now. So it might be an interesting way to get short if you don't want to take on the bond itself. Put options actually might not be a bad play here. Or call options in TBT. Might be another play. TBT vol.
Right, or
really
put
low.
Spreads. Selling put spreads in TBT.
Selling put,
because it's the inverse.
Yeah, that's actually not a bad idea either.
We're preempting Uncle Mike's strategy block here, where he's going to dive into quote-unquote bonds. So I'm assuming we'll be discussing that soon too. But
Stay tuned.
Before we get off the oil tip and the ETF tip, then Tony, I know you heard talking like XLE. We talked a little bit about USO on the show in the past and taking a somewhat dim view on it. Do you take a dim view of USO as well over at Tasty Trade, or are you guys active in that one?
It's not something we've been really active about, so I'll defer to the expert at the table here. So, no comment. I'll plead the fifth.
Yeah, I think USO kind of falls into that same. It's like the VXX. You fall into the contango trap where you're essentially short that widening contango.
If you're able to trade crude options, trade crude options.
All right, well, we have been running on this trading block for a while, but there's been some good stuff. I do want to mention again, we do have that mic out there for the audience. If you have some questions, feel free to come on up. You don't have to raise your hand. Just walk up to the microphone, and we will interrupt our gassing on to answer your questions. And if they're interesting questions, we have all sorts of fun little giveaways over there. I think maybe the best question will win that sweet
date
fleece.
with Tim Navabi.
The date, well, that's the other one. And then, of course, Sebastian, you're giving away all your courses for free for one day.
Absolutely.
Right? Pretty much everything you have there.
I'm sensing a little bromance thing.
I'm just jealous.
Feel free to slide down towards me, Rob.
I see the Mark Sebastian of 25 years old and in the young Tim Navabi, who actually is older than me.
Who's actually about 10 years old.
So you can see the effect of not having kids on his face.
All right. And with that, I think we're going to close out the old trading block as Tim Navabi blushes and loses it over here on the mantle. And we're going to roll right into the odd block. We left Sebastian's favorite just for you. We're going to do the new transition.
I hate that transition. I really do dislike that transition.
That one or the new?
No, the new one's nice.
The new one's interesting.
I mean, it's like being better than the old one. It's like being the best football team in Alaska.
But they love the pigskin up there. All right, and those for your listeners at home all know, and for our listening audience who are new to the show, The Odd Block is where I kind of run the show, and we talk about what's interesting and or unusual. It's been lighting up the tape in terms of unusual options activity. And we pull the bulk of these from the optionsinsider.com. So if you'd like to hear more about any of these names we're talking about today, then feel free to surf on over there. We have these and a lot more that we didn't have a chance to pull today. These are kind of just a rundown. We're going to kick things off here with good old Tucsaw's favorite, Genworth Financial Inc., ticker symbol GNW. They closed at the time of this writing anyway, about $8.28, down $1.21. Now, this is the name that does about 5,600 contracts a day. They did 50,000 today. And this is when we saw a lot of, I guess you can call it contrarian, near-term bullish flow out here in Genworth. This is obviously they pre-announced their Q2 earnings after the close yesterday, and when you do that, it's not exactly a good announcement, and so they opened up on the downside of that tip today due to what they said, quote, worsening trends in the mortgage insurance business. Analysts were calling for them to make about a dime more than they did, so not surprisingly, they set a new 52-week low this morning of 756 on this name. But despite that, and despite the fact that we saw a lot of crushing of the stock, we saw a lot of bulls coming into the front month here in the options for particularly the front month AUG9s. We saw about 15,000 of these go up or just in the morning with an average price of 11 cents. So these are pretty much near-term straight upside calls. People thinking that the beating that Genworth has taken is obviously overdone. They need to pop over the next few weeks. Also, the AUG8s, about 7,500 of those. So like I said, this is a name that does about 5,000 contracts a day. So in these two trades alone, you're talking about 4 or 5 times with their ADV on this name. The bulk of these, 3/4 of these, were lifting offers as well for a price of about 40 cents. So the bulk of these, like I said, tons of bulls flowing in to August in Genworth here. We also saw a little bit of mixed activity on the SEP8s, about 4,600 of those going up. Mix between buyers and sellers. That was the only real mixed activity we saw. The rest was pretty much straight up bulls. So, and you guys play it all out here in Genworth. Tony, you watch this one at all?
Unfortunately, I'll have my hands in my pocket on this trade. It's hard for these stocks when they break this $10 range to get their legs back underneath them and to come back up. But I'm not selling any call for 11 cents naked. I can tell you that much.
Yeah. These guys were loading up on them here in Genworth. So obviously they think the mortgage trend or the near-term downtrend in mortgages is overdone. Grigas, you guys have any activity coming on? It's almost kind of pretty active today. You getting a lot of calls this one at all, or
none at all? I mean, our whole week has been on Apple, and
really, even post earnings, you getting still a lot of Apple.
Yeah,
calls?
Still complaining about
Okay, well,
the issues they experience, which we'll talk about in the Express
We'll
blog.
hit that in the Express blog then, but yeah.
But yeah, none at all. Been maybe Radio Shack, maybe a little bit.
Even post earnings, Apple still dominating the tapes, like the VIX. You put Apple in anything, you put VIX in anything, people just open it and read it and want to.
It's exciting. It's exciting.
It's exciting.
No, but when you see a stock hit a 52-week low, you'll see guys come in that buy up a bunch of the calls just to see if the thing gets a dead cat bounce or bottom feeding, as we used to call it back in the day, and
have a hunch, bet a bunch.
Yeah, it's a cheap bet. I mean, what's the worst that can happen?
I mean, did
11 cents to make whatever.
Didn't Bank of America just do the same thing? It dropped below $10, and now it's trading $10.40, something like that.
Something along those lines.
Yeah. So I mean, you can do a dead cat.
Well,
bounce every once in a while.
I think Bank of America is a different kind of stock.
Genworth, Bank of America.
Breed of cat.
And if it wasn't
tomato.
If it wasn't for Ken, right, Griffin, I don't know if Bank of America would be over $10 right now. So we can talk about that in the next segment.
Yeah, we'll be talking about those boys when we get to E-Trade. Our friends over at Citadel. But before we do that, let's dive into another fun one. A little bit contrarian here as well, just because of the name, Radio Shack, the Shack. Grigas, I know you're shopping in the Shack quite a bit these days. That's your favorite name out there. Ticker symbol RSH. Good old Radio Shack.
Yeah, I don't trade in it, but I do spend money in Radio Shack.
You love your cables.
Yeah.
I believe without Radio Shack, we wouldn't be able to have this podcast.
That's true. They do furnish a fine cable. I should not slam them on the ear.
Yeah, when I need to repair my CRT TV at home, that's where I head to.
I bought a really neat shortwave radio from there.
For all your Cubs games, you sit there and tune in. Well, Radio Shack, these guys, this is from yesterday actually, and they closed at $12.79 when we wrote this yesterday, up about 14 cents. And they do about 3,000 contracts a day. They did 9,500 yesterday, which in and of itself isn't that big, but one of the reasons we wanted to highlight this was because these were bulls. And quite frankly, you don't see much in the way of Radio Shack bulls lighting up the tape these days, so we thought it was unusual enough that it bears some interest and some looking. And these guys have earnings on Monday coming up. And we saw, like I said, they closed at $12.79. We saw the AUG 14s lighting up the tape. It was a multi-exchange sweep order, actually. Picked up about 7,000 of these in just about 10 minutes, with one big block of about 5,600 coming up for about 23 cents. Similar to what we saw in Genworth, some upside specs. But still, this is a pretty sizable opening paper for Radio Shack. This strike had just about 900 contracts on it. So this is all opening paper. They're looking for it to pop about 11% going into earnings. And quite frankly, and maybe the panel can correct me here, but I haven't heard anyone out here really beating the drum for Radio Shack to blow the doors off on Monday. I don't know, Uncle Mike, you guys heavy in Radio Shack these days?
About as heavy as Sebastian.
So about 8 pounds then. Is what
Yeah, I've been anti-Radio Shack ever since they fired Terry Hatcher and Howie Long.
But this one, yeah, this is like I said, these guys are down on they're on the bottom end of their 52-week range, so there could be a technical play like we saw a little bit with Genworth, people specking on a bounce. But this is obviously looking for an EPS boost as well on Monday, and I just love pointing it out the fact that there are indeed bulls still in Radio Shack. I mean, what do you these days? I mean, if you're not doing a live radio show or buying gross batteries, I mean, gross amounts of batteries, what are you buying at Radio Shack these days? Are you buying your new plasma television at Radio Shack?
Grandparents buy their cell phones from there.
Oh, yes.
All right, that's the big thing. It's grandparents' cell phones. It's my AC adapter broke. It's, that little doohickey that connects two plugs together. I mean, it's all the stuff that you don't realize you need that you actually need,
Exactly.
but
Doohickey,
still.
that's their business.
Yeah,
Doohickey.
it really is. It's, I forgot I needed that.
Where else can you get a beeper?
A beeper.
That's right. You need a beeper, you go to Radio Shack.
I think Seinfeld had the best line ever about Radio Shack, and they said, "Why do they ask for your phone number when you buy batteries?" And that pretty much sums up their business model in a nutshell. Email marketing to people who buy batteries. All right, we're going to close out the Shack then, just because it's an absurd one, and we go up to another medical name, St. Jude Medical Inc., ticker symbol STJ. They closed at the time of this writing at $47.81, up about $1. This is another name that does about 1,900 contracts a day, so it's about Navabi size in terms of their average daily trading size. And they did about 20,000 contracts yesterday. And Tusa, I wanted to highlight this one because it's a fun one. They came in with your favorite, the
double stupid?
The stupid, yes. The stupid. It was a ratio call stupid with a short put kicker. When I first saw this one, I thought this had to be you actually coming in, because this reeks of KYO if ever I saw it.
Short the put by the stupid, right?
Exactly. This is for those of you who don't know, this is the St. Paul, Minneapolis-based maker of medical devices, and their sales were down in their recent forecast. So, not surprisingly, the shares opened down about 3%. Yet, once again, bulls coming in to scoop, thinking that the downturn has been overdone. You can't stop the bulls these days. When even Grigas is bullish, I start to question.
That's scary.
Well, they're named after the patron saint of medical devices. I don't know if you knew that, St. Jude. Back
in the Bible.
Yeah, no. Don't you know the story about her healing the kid with the medical devices in him?
Get ready.
No, it's a famous story from back
the Book of Leviticus, I believe.
Yes,
that one.
Yeah, no, it was numbers, but same
device.
difference.
Well, Tusa, this was a three-way stupid, actually. They picked up 3,000. This is the name. It does about 1,900 contracts. They did 20,000 yesterday. The bulk of it in this stupid. They bought 3,200 of the Jan 50s. And this went out at 47.81. They purchased then on top of that about half of that, 1,750 of the Jan 52 halves. And then they financed the whole thing with selling about 5,000 of the Jan 42 half puts. So it was
like all my tricks rolled into one.
Exactly. It's a ratio stupid. They sold the downside
ratios.
puts.
You got multiple premiums. You're selling puts. I mean,
I had to bring this.
I didn't know you were allowed to do all that in one trade.
Big trade. It wasn't just the fact that it was so small. I would have thought it was for you for sure.
Right.
Nothing under 10,000 really lights up your tape anymore. But yeah, essentially, we saw a three-way stupid, and this can even get into a. Tony, I'm not familiar. Know if you're familiar. We've had a raging debate on the show over the past few months about the the stupid, the call stupid, the put stupid, and whether it is indeed stupid. I tend to lean towards that tip. Uncle Mike here is a big fan of the stupid, and he loves putting on upside call stupids whenever possible. What's your
way to put the new guy on a spot? On his first day.
I'm trying to include you.
Guy's sitting right next to me. You want me to say something bad?
Don't let the fact that he was a former
right.
lineman for the Buffalo Bills deter you at all either.
See, these guys have been giving me grief about being long apple since about 150, I think it is.
Yeah,
Touche.
Yeah, I'll take that one.
They don't call it stupid for the wrong reason.
There we go. I like it. Very, very well played, sir. So he falls on my side of the equation. But Tusaw, you don't do it.
No, there's a whole method to the madness.
You typically leg into your stupids a little more, which I think makes a little more sense. You're using the momentum of the underlying. You're
There's
using
rolling.
There's
a lot of moving parts in the Tusaw stupid.
I mean, you don't. Weren't you going to have an OX webinar about stupids, and then it kind of it fell through?
Yeah, they wouldn't let me do it.
Is that Josh? Did Josh kill that one over there? Oh, he's not here.
I'm so sorry to step on you. Go. As opposed to a stupid, if I was bearish on a stock, I would look to buy the at the money put spread and sell an out of the money put spread further away to finance it. That would be some way of applying a naked put to a strategy.
It's far more nuanced than a ratio stupid.
That was actually one of my thoughts. I'm wondering whether the guy's actually short St. Jude here and has come up with a clever way of hedging a short position as opposed to actually being really, really long. All you need to do is be short. How many of these did he do?
Did 3,200 and 5,000 of the puts.
All you need is to be short 200,000 shares of the stuff.
Stock, yeah.
That turns into a risk reversal with a put spread on the bottom.
Right.
Sure.
So it could be something like that.
So it could be a smart.
Yeah, could be a stupid smart.
Usually when we see...
That's what my friends used to call me. Back in my college days.
In the college.
One of my nicknames in college.
Between greasy meatball sandwich.
Yes,
By the way, where are the mini medals supposed to open for us today? They didn't show.
Right.
They didn't make it. I thought you were handling their recent road trip here. But yeah, and anyway, a stupid, I tend to lean towards, if it looks like dumb paper, it probably is dumb paper. But maybe they are indeed highly nuanced, as you suspect, and they're hedging a short.
You never know.
I'm a cynic. Call me a cynic, I guess. And now,
no. If it looks like a duck and acts like a duck, it's probably a customer.
And now, Tony, we'll get to your buddy here, Ken Griffin, and his boys over at Citadel. Of course, next up on the tape is E-Trade Financial Corp, ticker symbol ETFC. They closed when this was written up at $14.72, up about $1.77. This is another relatively light volume name. They do about 4,600 contracts a day. They did 46,000 yesterday, and the bulk of that was because your boys over at Citadel came out and slammed the management, saying they wanted a change up at the top. They wanted change at directors, and that sparked just a frenzy in E-Trade, including, surprise, surprise, more stupids, Tusaw. So I think maybe you were active. Yesterday was a day of stupids. I'd never seen that many stupids going up in one tip at once. But yeah, of course, for those of you who don't know, Citadel, one of the largest shareholders in E-Trade, came out yesterday with some pretty negative comments for the current management and said they wanted some changes at the top. And that sparked just a frenzy of options activity. We saw people across the board. We saw bulls coming in, scooping up about 3,000 of the SEP 15. So pretty much at the money upside calls here in September, so a little bit farther off than just near-term upside. We also saw the call buyers coming in at the AUG 15s and the AUK 15s, lifting those as well. But at the same time, we saw...
Did you know Sheldon Nadenberg just walked out of the room?
Is that him? I didn't see him.
Yeah,
that's Sheldon.
We had an extra mic. We could have brought him up onto the panel.
I was like, you wrote the book that taught me how to trade.
Yeah, he taught all of us.
So I think it's the only book I've ever read.
Yeah, it's one of those nice. It's a good book for education. It's a good book for some light sleeping at night too. It's a good combination. Yeah. But
there you go, folks. We now know that Shelley Nadenberg listens to the.
We were debating before about Nadenberg versus McMillan.
Yeah,
he wanted to come in to weigh in on that.
Yeah, and we all stood soundly on the side of Nadenberg. I'll recall, and there you have it, folks. The man that wrote the Bible of the industry listens to the option block. So
forget the top 20 of iTunes business.
That to me is the best compliment we could possibly get.
But yeah, that is true. I mean, I think all of us, when we first walked on the trading floor, we were given, here's your jacket, here's your Nadenberg, go crazy.
Here's your green book. Read.
Don't blow us all out in a few weeks. But yeah, anyway, on the interesting activity we saw here on E-Trade was yet another stupid. Tusaw was busy yesterday. We saw two legs of the AUG 14 and AUG 15 puts going up. This time he didn't ratio it. He bought 6,300 of each of the AUG 14 puts and the AUG 15 puts. These are at the money and near downside puts. So yeah, these, and with no open interest on either of these strikes, about 200 contracts each. This is all opening paper. So essentially, we saw bulls to the upside in E-Trade and a size about 13,000 contract put stupid to the downside in E-Trade. Like I said, usually you see maybe one stupid every week or two, but two in a day, let alone for size. I don't know. Tony, were you guys out there in E-Trade? Is that you guys slinging some stupids? Or?
No, not necessarily in E-Trade alone. We did talk at Tasty Trade about the financials being, when the market was rallying, they were the only ones that were really underperforming, and we really liked the financials a lot. Before Ken came out, and I'm not trying to trump Citadel and Ken, it was a bold statement what he made. It was bold. Regardless of whether you think he was right or wrong, it was bold. And the man's got his money, whereas, he could say it, right? Because he's got a huge position in there. So I think he has the right to say that. I don't think I have the right to say it. But I think, everybody talks about news. I think that's an event that will, when the dogs like the financials are starting to percolate and now rally, and you've had this. This rally's been on the back of technology stocks, like Apple, like you talked about. Yeah. Are you uncle or aunt?
I'm the uncle.
You're uncle. He's uncle. Like Uncle Mike said, you've had these technology stocks leading the market, and now when you get the financials, which have been the dogs of the market, and if you have a view like we have that bonds are not a buy and interest rates can only go up, all the brokerage firms are going to benefit just by default of their business model if interest rates go up. So if you think interest rates are going to go up and bonds are not going to go up, and Ken comes out and says something like this, and it ignites the whole financial market, I think that's why we could be brought to new levels. Listen, it's just a theory.
Are there other names that you are looking at among the brokers?
We put a play on in XLF. I won't say individual brokerage firms, but we put a play on in XLF on Monday. That was a bullish call spread. Just an at-the-money call spread. Just buying it with no intrinsic value. With no extrinsic value. I think the index was trading around $14.56 or 57 cents, and we bought the at-the-money call spread for 55 or 56 cents. Yeah, it was a good trade. Listen, when it moves 5, 6, 7% in 3 days, we didn't think it was going to move 5, 6, 7% in 3 days. We figured it would take, we were doing an AUG option, we figured it would take 20, 25, 30 days. It's a nice move.
So do you like the banks as well, or just kind of the individual brokers?
No, I like the banks too. Just by default. Again, not because I think banks are great stocks to own and they know how to make their stocks go up. I just think the nature of the beast and the environment that we have, these low interest rates have hurt the banks, and now if interest rates rally, meaning go higher and bonds go lower, that by default, just by the spread that they have, there's so much money sitting on the sidelines and so much money sitting in these brokerage firms that just by default their business model is going to make money.
That's interesting.
So I don't think E-Trade necessarily has a great management team, but I just think their business model has to kick in, just like all brokerage firms.
Well, sorry.
No, real quick, I'm curious, why do you think interest rates are going higher? I've seen people say that for the last 3.5 years.
Well, they're not going lower.
Okay, they're not going lower, but they could stay at this level. They could stay at this level for 18 months to
and they may stay at this level for another 18 months. That's not necessarily the point I'm making. I'm just saying I look at everything from a risk-reward standpoint. So if I think my risk is 1x to the downside, but I think my gain could be 3x to the upside, then I want to be long that. And that's really what it comes to. Just a risk-reward play. I just don't see any downside risk in owning the financials at this point, or much.
Tusa, I know you've been pretty active, and at least watching XLF a lot. Are you guys active in XLF at all right now, or?
Yeah, we're long it right now.
Yep. No collars, naked long.
It's part of a more complex.
How do you collar a $14 stock?
I know. It's part of
with a 15 volatility.
Yeah,
right.
He's short the 2.5 put out there in XLF.
Right. 3 1/4 put. Thank you.
Oh yes. He's getting deep there.
So
That's
right. and one of the things is, I'm wondering whether interest rates going up a little bit would actually be good for the economy, because the banks would finally feel like they're able to loan out at semi-logical rates.
I think that would actually bring home prices down even more to where they're still more affordable. I think home prices are still too high, personally.
You do.
Well, all right, so you don't own any property on the North Shore.
It's ridiculous to pay that even now. But if interest rates come down, interest rates come up, housing prices would theoretically come down. That's a way with which we can start getting movement in the real estate
Well, I'm wondering
market.
whether that gets kind of banks willing to kind of open up the purse strings
And
a
that
little
too,
more.
they'll be able to get more reward for their potential risk with a higher interest rate.
Let them wait for the interest rate rise, at least till I finish my refinance. I think about another week to go. And
We'll
then
take
we're
it, yeah.
good.
Well, I'm just waiting for the time where I can stop selling puts in TBF and then start buying calls in TBF. That's my plan. And TBT. And the bonds. And
Bonds. Once again, we're leading into Tucson's.
All right.
segment
So,
here.
yeah, well,
We'll get to it. Okay, we'll finish off the old odd block then with another interesting one today. Owens Corning Sales Inc. ticker symbol OC. They closed when this was written at about $36, up about 37 cents. They do about 1,600 contracts a day, so about, like I said, about Nababi size in terms of average daily volume. And they did about 21,000 contracts. This was when this was written. They probably have more going up. And instead of a stupid Tucson, we saw the bullish risk reversal on this one. And I'm a little more of a fan of this than I think perhaps the naked stupid. And we talked about this on the show before, just using the risk reversal as a good way to put on a modestly inexpensive or cheap upside play in a stock. And this is the name, like I said, does a couple thousand contracts a day, but we saw a guy coming in today hitting, blasting about 10,000 of the AUG 33 puts. He sold those for 40 cents. Then he lifted the offers on the AUG 38 calls for 45 cents. So he did it for a net debit of a nickel. And this is obviously a cheap way to put on some relatively size upside here in Owens Corning. Like I said, it closed about $36. He's got about $2 to go for these calls to start paying off. And he's looking for a substantial rally, and rather than coming out and picking up the calls naked outright for 45 cents, he financed it with a downsize. Obviously, Corning is pretty funny.
no, my sister just texted me and said, I thought most men were fans of Naked Stupid.
I take it she's in the audience and she's not using her psychic powers.
She just knows me that well.
If I wasn't married, I'd like to meet your sister.
She can sense when you're getting juvenile and chime in even across the text. But yeah, so this was essentially, in a nutshell, a short. You're killing me, Sebastian. You're killing me. But this is a cheap upside play here.
We keep it above the brow all the time at Option.
Yeah, you're lucky
That's how we roll.
Lucky you don't have Danielle here on the boards today. She'd be cutting you left and right. She's used to cutting you. It's amazing you get in the show half the time. But yeah. Anyway, long bullish risk reversal here in Owings Corning. Any of you guys playing in Owings Corning at all, or like to? I know you like to trade risk. I mean, Sebastian, you like risk reversal.
The only thing I know about the OC is that Marissa got killed in the final season, falling off the bank of a cliff when her boyfriend chased her down. Or no, ex-boyfriend.
Now you're scaring me.
Yeah, we haven't had our quotient of 80s references yet.
Well,
and,
that was actually 90s.
That's true.
90s,
Did it start in
no,
the
it
late
was 2000s. That was 2000s.
Oh, the new one.
The new OC.
Oh, that show. I'm thinking of the.
That was a
I'm
great
thinking
show.
of 90210.
How dare you, good sir? That was a fine show.
So what are we missing? We need to hit Transformers. We need to hit He-Man. We need to maybe a Knight Rider. We need to throw in there.
Right,
as well.
Knight Rider. Well, Transformers. I mean, that's one I'm shocked we've not gotten into. There just hasn't been a good reason.
We are here in Chicago, in the bowels of a city that was destroyed in the recent abomination of a film. So we did that one already though on the other shows. But I think that is going to do it for the old odd block, unless we have some courageous souls here in the audience who want to get up to the microphone and ask a question and win some fabulous prizes. Indeed, that dream date with Tim Navabi still up for grabs. So if anyone wants to be courageous and ask a question, like I said,
doesn't matter.
You don't have to wait till the end of the segment. You can come on up as well. We want to make sure that we incorporate any audience feedback that we have. But if there are no questions, then we will roll right into the Express block.
The The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right. And welcome to the Express Block. This is the portion of the show where we dive deep into Tim DeBobby's personal life. No, actually, we talk about what's going on the OX platform, what your customers are up to, what kind of questions you're getting, what kind of feedback you're seeing, what kind of unusual activity you're seeing on the OX board. So let's just dive right into it. What were you guys? What was lighting up your tape for the past few sessions?
I don't want to harp on Apple all week, but I got to say,
harp away, sir.
300 calls in the first 40 minutes of trading on Wednesday morning. It was 60% Apple. And I think Sebastian and his volatility. It was a great time to teach people about volatility and what could happen when you buy that 400 call.
Was what we talking about? They were getting long premium, getting killed because they couldn't hedge in the after hours kind of thing.
Well, no, it was retail investors thinking that Apple. Everyone thought that Apple was bullish, except for me because I like to sell stuff short. But the consensus was that the stock was going to open up about $20 higher. Pre-market was trading there. I had people calling in. They owned the 400, the 405. And I think you said you were selling it for $220 or $2 even?
We sold it for $3 at around noon the day of earnings, and then the day before earnings, and then right around 3 o'clock, right at the close, we sold it at $220 again, or $2.10, something like that.
Oh, wait, so I had these clients calling in that were pretty much on the other side of those trades, saying, "Oh, you know what? I want to sell it for $8, but I want to at least make $4." I mean, they had these, ideas of grandeur in their head. They're like, already looking at the new computers and what they're going to spend all their money on. And I'm like, did you take a look at, vol, before? Vol was, I think, implied vol was around 90, maybe around there, and it dropped down to about 38, that day when we opened up. And people were calling up, and I take offense. I know it's retail, but I take offense when people say, I got these market makers on the floor that don't want to pay the accurate price.
The market makers are evil.
Yeah,
evil market makers.
You guys, I remember when I was still on the floor, I had a retail trader coming by, and I was teaching him just talk about what we do, and I go, well, you ever bought a call into earnings, and the next day the stock's up and it's trading the same price or lower? And the guy said, yeah, I've seen you guys do that to me. And I looked at him, I said, I don't do it to you, you do it to you. All right? Because the only reason why that thing is caving in is because every single one of you lemmings is selling right into the announcement. So if everybody was buying after the announcement, that vol would still be up, and the market makers would still buy it. So you reap what you sow, retail trader.
Yeah. So my first 3 calls.
By the way, option pit.
Is that what you tell all your customers?
For retail traders.
I want to go on record saying I am a retail trader now, and like I said previously, I've been a market maker for 20 some odd years. There's no market maker on the floor of the exchange that does not want a retail investor to be profitable in the trade.
Exactly.
I mean, no, it's true.
No, I agree with you 100%.
We don't.
Otherwise, you have no business.
No, as market makers, as a market maker, I don't want to trade with other market makers, right? I mean, I just want to make the small amount of money inside that spread and put on a position for pennies below or pennies above theoretical value. I mean, the customer. I mean. Customers talk about commissions and everything else like that. The guys that are still on the floor today probably pay a higher commission rate than the people in this room and the people that are listening.
Certainly they do.
I mean, so you can't make the argument that they don't want you to succeed. They want you to succeed. It's all about the strategy. And I think the gentleman who was talking about, the customers calling up that had bought the out of the money calls is 100% correct. Yes, I called you gentlemen.
First time for anything.
That's a first on this show.
Yeah, well, and I think people need to realize that options are the way market makers trade. It takes away that zero-sum game effect that a lot of retail customers think about.
Because it is a zero-sum game. I mean, all things being equal, it's a zero-sum game. It's just the strategy and the time involved that's the differentiator.
Right. Agreed.
And the hedge.
and the hedge, sure.
And the hedge.
And right. Selling the top. Yeah. And buying the bottom.
But speaking with this client, it was nice that, he was very upset at the beginning of the call. Get through 30 minutes of the call. He understands a little bit more about volatility. the drop in vol after earnings or any type of FTA or large announcement. And then we looked at his position. He was down $1,000. He bought the 10 of the 340 puts and 5, I think, of the 400 or the 405 calls. And I go, if you just took the other side's position, you'd be up $1,000. You could sell premium. I go,
you're bringing the customers to the dark side with you. So.
Well, I mean, that's you always keep another 10 spot in your back pocket to sell premium. You always hands out when you're in doubt, right? And I think it opened his eyes that you don't always have to take a long position. I mean, obviously you need a lot more money. But I said, what about a credit spread? I mean, you're hedging your risk. You're bringing in some premium. It's a lot less than you might make if Google jumps up $30 and you got a $1,000 winner per contract. But now you're making money consistently, and to be a long-term profitable trader, it's consistency, and that's what it is.
Yeah, I'd like to add just one thing. There's so much great education and so many good things on these brokerage sites and other places to go that if a customer today is buying an option, call or put, outside of its expected move, they should expect to lose their money or hit a home run. I mean, that's what that strategy is.
The Sammy Sosa strategy.
It is the Sammy Sosa. Yeah, absolutely. I mean, I'm originally from New York. The Dave Kingman strategy, whatever it is. But everything is about price, and I'm not talking about the price you're paying. It's the price of the stock, and that's what the option will be priced on. So, I mean, I can't feel sympathy for anybody who buys an out-of-the-money call or buys an out-of-the-money put and outside of an expected move and expect to make 50 cents or $1. I would want you to make $20 or lose it, because that's what's going to happen, especially if you're trading these weekly options. Sorry, guys.
Don't apologize. That was beautiful.
Okay.
That was great.
And I think that sometimes when traders think vol, they think that they have to maybe just purely sell premium. Traders kind of get into the habit where they do credit spread, condor, debit spreads, naked long, naked short. There's a lot more flexibility out there in options. You can do back spreads. You can do calendars or reverse calendars and actually trade volatility instead of actually trading the stock. So you can maybe be bullish Apple and maybe buy a bull call spread, and you can do something on the other side to hedge yourself against the volatility. Do a reverse calendar that's going to knock off some of that volatility premium. And I think that sometimes you get locked into habits, and we're all creatures of habit. You get locked into I'm a credit spread trader. I sell premium. Well,
degenerate premium sellers,
and it's not always the right thing. I mean, it's being flexible and being nimble and being able to constantly evolve as a trader and not be intimidated because a strategy has multiple legs or multiple pieces.
Ooh, multiple legs. It's a good segue into our next topic. But before we get into that, I do want to mention that we do have 3 representatives from OX here. It's a good time. If you do have any questions about either this brokerage or brokers in general or execution or trading, by all means, this is the time to ask. And if your questions are interesting, you may win some fun prizes, even besides the dream date. Of course, you can have, there's all sorts of fun. What do we have over there? Hats, shirts, even a nice fleece. So here we go. We have a winner online.
Real quick, we don't accept questions from Cub fans.
Why we suck.
Go ahead. So why don't you give us your name and where you're from?
He may not be. He may be wearing a Cubs hat, but for you Sox fans, he did drive a Trans Am here. So we're good.
Wow.
It's insulting or maybe complimenting our listeners. I don't know.
Well, I know where Mark lives, about 2 blocks from me. So, so my name is Marcus Felker. Like I said, I live literally 2 blocks from Mark. So I had a question.
My condolences, sir.
My question is more around oil, some of the commodities. I think the gentleman in the white shirt was talking about oil, maybe a little more nuanced question. So I haven't traded a ton of oil options. However, I'd be interested in sort of your thoughts or whatever on basically skew curve of, the front 3 months of oil. And, if we're looking at it being really steep or shallow, or maybe in your experience, sort of what would be construed as steep or flat in oil, or I guess any of the metals even.
Well, with commodities, the skews.
Excellent question, sir. Help yourself to your selection from the glorious prize table over there. You're the first one. You can even get the fleece if it fits you.
That face.
Perfect for today.
With commodities, what we really see is kind of a different type of vol skew curve than you typically see with options, because you have the panic buying effect that you don't have with stocks. People don't, outside of maybe after an earnings announcement, people flock to Apple or Google or one of these big tech names. As far as what the intraday, if you look at like the crude oil volatility curve, it does whip around quite a bit. It's for myself, it's kind of difficult to put a numerical value as far as implied vol levels. It's how big the smile is. If it's the Soundgarden black hole sun kind of creepy, really.
That reference is far too late for the show, sir. We stay in 80s only.
How dare you bring up alternative rock?
But lately, what I've tried to do, because we get into the trap of trying to, unless you're a floor trader or actively in front of your screen all day long, to really get all the vol moves on oil, is if you look at like the OVX or something like that intraday, the chart itself moves kind of smoothly, but the intraday gyrations are huge. Is kind of trying to plot it. So I've actually gone away from trying to trade vol skew intraday, just because you get whipsawed like trading Apple on right after an earnings announcement in aftermarket. It's all over the place, and it's certainly easy to get chewed up by that. So I've learned that taking a more measured approach and trying to trade maybe end of day volatility, looking at the OVX, kind of looking at that 30 level as kind of a base, maybe become more of a more inclined to sell premium when it gets up to like 35. It's going through crude oil volatility or commodity volatility in general is kind of difficult without a computer here and kind of being able to show.
Where does oil vol get in like a real panic?
In a real panic buy?
Yeah, where would you see oil vol get to? And let's say like at the money. Although knowing that calls get bid up way more, but
puts get in true panic selling. Puts will take on that kind of equity role, and you'll see the put vols get up there. But I mean, you can liken it to NASDAQ stock going into earnings, a big name tech stock. You can easily see vol creep up toward triple digits. Although that's rare. I mean, you're probably going to see at the money, in a real panic buy, you'll see 60 or 70.
Is that where we got when we were selling off back in was that June?
Yeah, when the Greece crisis initially hit and we really broke, that's kind of where we saw kind of a median. It tends to, again, the intraday moves on vol are huge, but the kind of the end of the day, that's kind of where we stabilize, is around 60, 65, 70.
You get a lot of people coming in looking to do, migrate their equity trading into the commodities like oil. Like, for example, they're coming in looking to do covered calls on oil. Do you then have to walk them through the whole scenario of commodity skew versus equity skew and how these covered calls are not exactly going to perform as you may expect? Or do you wait till after when they call back angry and then you explain that to them?
Well, a lot of kind of vol-centric traders will tend to gravitate toward the OIH and the USO, whereas a lot of commodity traders, unfortunately, we have a lot of people that will see the news, be like, well, oil's creeping up toward $100. I'm going to go out and buy some calls because it's limited risk, not realizing how much premium you're buying and how expensive the option is going to be. So we have seen more sophisticated traders move over to the oil side, and even we've had traders that have traded in the OEX and SPX pits that are kind of dumbfounded at times when when dealing with the skew. But once they adjust to it, it usually results in a margin call, and then afterwards they'll rein it in because your nominal value, how much you're actually trading, is so much greater.
It's a big boy contract.
Yeah,
it's
and after usually those traders will kind of sometimes will think that OIH and USO are going to have the same skew, and they do, but not. It's not to the extreme that I think that oftentimes there's a lot more dumb money flowing without smart money to kind of just stop it in oil. So the vols will get crazy, and you'll see people where the market won't. They'll be short, and they'll be gamma hedged and boxed in, and they'll be on call, and that's because the vols will kill them. And it's also the way that span margin works. It kind of beats you up margin wise when you get closer to expiration.
That was a great question. I do encourage you, like I said, if you have more questions, now is the time to ask our brokers folks. Sebastian, you have a question?
No, I don't.
You looked very poignant there for a moment.
Oh, here we go.
No? Oh, Mr. Dempsey, by all means, regale us, sir.
John Dempsey, a financial consultant, and quick question on gold. Figuring that, particularly in this climate with the government, what's going on, and that nobody in the history of time has probably ever could accurately predict where it's going to be a week from today. Depending on your risk tolerance, would you be looking more at doing some verticals on that, or what would be the idea with the gold? I think you were talking about it earlier. Yeah.
Yeah. Like what we do for a lot of our longer term investors, we collar gold. And I'll talk a little bit more about that in the bond block if we want a little bit. But
you can get into more now if you want. You don't have to go into the bond side, but just the gold collars. There you go.
Yeah, well, like what we do, and right now going into the announcement, what we've had to, instead of like when gold touches our short strike price on the covered call side of it, usually we'll either roll up and out. Sometimes we'll just stay out of the covered call and let it run if it's continuing to go. It just depends on a lot of factors. Right now, the way that we're positioned in gold, we're long GLD, and we are long the 154 put on it. And pending the announcement, for the debt ceiling announcement coming up in a couple of weeks, we're just going to take that chance, see if it pulls back, then we're a little bit tighter on the put than normal. But
I figured you'd be long that like 70 put or 60 put or something along those lines for your levels.
Hey, Tony, do you guys ever look at like GVX or GVZ? Have you guys talked about that on?
We do. GDX mostly, if we're going to go that way. Gold to me is a phenomenon that I don't know why it acts the way it acts. You know what I mean? It just does what it does.
Because it's pretty.
Because it's pretty.
It's shiny.
Yeah. I'm Italian, so I like gold. At the 1600 level, it's a round number, and again, these things happen just because they happen, but it's a round number, and it's been gyrating back and forth there, trying to find its legs, whether it's going to go higher or going to go lower. It's been following the market, but I just have a hard time getting behind it. I have a wait and see attitude with gold. I'm not long it, I'm not short it, but wait and see at this point. I don't know. I guess I'm waiting to pounce, so I'm looking for a good opportunity to short it. But I just don't know why gold does what it does. I don't see the allure. Mr. Dempsey, you're back.
I just wanted to finish my point. I, by the way, have no interest in Tim.
Yeah, we have other fabulous prizes, sir. If Tim doesn't meet your approval.
Standards. The only thing I've kind of been watching this gold vol index that the Merck and the SIBO have been pushing. One's GVX, one's GVZ, and the only thing I found is that when gold vol is very, very range bound, and when it hits those really, really lows, you want to buy it, and when it's really, really high, I think there's some sales there, but. The sells involves delta hedging. The buying is a lot easier than the selling on that one. But it's real interesting. So
I know one of the things we did want to discuss. We talked a little bit on it a few weeks ago. I brought up an issue I had was executing some spreads, and that that prompted a lot of interesting feedback from the audience, a lot of questions from the listeners, and obviously there's still a lot of confusion on that topic and how people come in to trade spreads and execute spreads. Sure, Mark, I'm sure you discuss this a lot with your various clients, and I'm sure the OX guys, you guys are on the phone with this quite a bit. So I thought, what better time than this segment really to discuss this a little bit more? And I think what we see from a lot of these retail traders who are coming up, starting with the one-off, buying upside calls, buying downside puts, whatever the case may be, writing covered calls. Then they graduate into some of the multi-leg stuff like verticals and things like that. And they tend to have a belief or an opinion that the spread execution works the same way as single leg. They see NBBO, I can hit the NBBO, I can trade this spread on the NBBO, and it should be immediately executed. And when they're working an order at the NBBO and they're not filled, we hear about it all the time on our site. I'm sure you guys hear about it a lot more at OX. Is why is that happening? What's the problem with that? And I think they're not really they're not grasping the fact that that order is essentially just being held hostage, quote unquote, on one exchange somewhere. It's not being, as would be with a single leg order, being routed to the NBBO and to the best price. You're on one exchange, and how that order routing behind the scenes works is a whole other lengthy discussion, probably for another day. It gets into a lot of behind the scenes stuff. But you end up on one exchange for better or for worse, and then it's up to that exchange to honor the NBBO, or you're essentially kind of stuck there. And so I'm sure you guys get this call probably quite a bit, I would think.
Yeah, spreads are kind of like all or nones. The exchanges are really hesitant to link away. On straight orders, they kind of have to link away. And if your order is sitting on Philly and then ARCA posts an offer that matches it, they'll move it away. Spreads they're kind of hesitant because they want to keep that business all in house, and they don't necessarily want to link away. It's kind of how spread orders come in. Basically, the spread orders come in. They do hit the smart router. So the smart router will look at where the NBBO bid and offer is. If there's one exchange that has a better, if you're selling a spread, if you're doing it for a credit, if there's an exchange that's posting a better bid on that spread, that's where it'll go. And then from that point, if everybody's bid and offer at the same levels, it'll go to wherever the route preference is. And where the route preference is depends on a lot of factors. And there's exchanges like BATS, which we don't really route to.
I'm thinking you're not sending many orders to BATS right now.
But they're. BATS had a really attractive rebate offer.
Yeah,
I'm just using that.
Yeah, there's some that's where when all other things are equal, I'm not that payment for order flow faction can turn into a little bit of an issue sometimes.
I've got a little.
But we're not going to talk about that. We got a bunch of brokers here, so we're going to leave that off
a quick answer on getting your spread filled, I would say. Or if you want to trade the spread, is look at the legs. Are you selling something that has a zero bid?
Great point.
Really, just take a look at the entire trade. Take a look at the entire order. Take a look at the bid and the ask on everything there. If it doesn't look right, it's probably not right. And I would always tell customers if it doesn't look right, if you have a question, if you place an order at the bid or the ask and you're trying to hit it and it's not getting filled in a minute or two, pick up the phone and call the broker. Just that's really the easy answer.
Well, and on individual legs, I know OX and TD. I know I'm not supposed to say that, but.
I'm not involved with any brokerage.
Formerly, yeah. OX and OX especially, they will let you route to basically whatever exchange you want. So if you think it has something to do with the routing, which most of the time it doesn't, hey, cancel your order and send it to the ICE, send it to the SIBO, send it to the PhilX, and see if that gets you filled any better.
I'd wager the bunch of them.
Or call up Tim Navabi, and he will get on the phone and say, listen here.
Yes, personally.
Hey, do I need to...
Question then. So with that specifically, we won't name brokers, but not every broker which has a great commission structure, when you attempt to route when you don't want to go to the BATS because someone's paying a lot of money to send it there, you pay higher commission. So it's sort of, I'd be curious on people's opinions on order routing and such when you take it and you look at it holistically from a commission structure. It's fine payment for order flow. I know you guys can't talk about it, but it exists. And so across picking different brokers is how do you navigate that as, advanced retail or whatever, because it is annoying. I'll say it, so I use IB. It pisses me off when if I use a smart router to get good commissions, they send it to
rephrase
bats.
pisses you off?
No, I'm sorry.
No, I'm kidding. It's fine.
It sends it to bats, and now I can either let it sit there and pay an order cancellation fee and then try to route it to like the SIBO, which I'll probably get a better fill, but now I have to keep statistics on whether it makes sense to use the smart router, which in my opinion is smart for the broker, not smart for me. So for whatever you guys can say, it'd be interesting to hear.
That's a touchy subject.
How transparent is it on OX to go in?
You just asked these guys to point out where on a doll where they got touched.
Yeah, but
can I take it?
Yeah, absolutely.
And I don't represent a brokerage firm, so I'm a retail investor just like you. Now, I have been a registered rep for other brokerage firms, and I've been in the business for many, many years, and I have the same commission schedule that you have. I don't have a special rate or anything like that, even though I've had 30 years in the business. I would challenge you to do. Well, 20 years as a market maker, 30 years as a trader. I made my living with my ears and my eyes for quite some time. So don't talk over there. And I'm kidding you, Mark. 22 years as a floor trader between the bonds and the OEX and American Online. Anyway, 30 years as a trader. What's that?
You were in the AOL pit?
Yes, I was.
That must have been fun.
Yeah.
Yes,
you were one of those guys fighting to get one of those first few spots out there.
I was the 13th guy in the AOL pit. And they went to over 100, so I didn't like the boat people who came after me. I'm kidding. Bad joke. To get back to your point, I mean, really, the markets are so efficient right now that it's basically 1 penny. I mean, that's the difference between getting filled and not. Well, then if it's more than a penny or two, you're probably not trading products that are really, really liquid. And that's the first thing as a retail investor, that's what I am. I mean, that's our edge. I mean, the old edge on the floor, and I've been on that side as a market maker, was to buy something on the bid and sell something on the offer because the market was wide. Today, with 18,000 stocks and hundreds of futures and all of these inverse things that you can trade in IRA accounts and everywhere else, if you're not trading a liquid product that has really tight markets, then you're probably not doing yourself a service. And you have a good commission rate at the brokerage firm that you're at. And I would challenge you that for the 1 penny, just route the order and get filled for the 1 penny less. I think in the long run, you'll be better off with the position than the extra penny.
No, I mean, I totally agree. And there's plenty of times where you just pay up because you need to get it done.
No. Never pay up because you need to get it done. That's a different. I guess for a lot of things, it's more than a penny. So if sometimes a nickel or whatever, and that it's really about if I place it on the SIBO, and Mark, we've seen this. We've looked at some stuff we've done. You place it the SIBO or the PhilX, it'll get filled about 5 minutes before where my smart router sends it to. And the problem is now you're taking actual time market risk, and what are you going to do about that? And how much is it worth to take that off? And I just want to point that out to people that are looking at commission structures, because when you start doing it enough, that time slice where you're waiting can be very valuable, and you need to sort of wait out, do I pay an extra $1 per contract or whatever? All right, so I'll go one step further and make another challenge to you then. You mentioned your brokerage firm, I'm not going to name it, but it's probably one of the lowest rates of all brokerage firms. And I'm not saying you get what you pay for, because I think almost all the technologies between a lot of the brokerage firms is basically the same. But you get customer service someplace else that you're not getting at this other place. I mean, there are different factors that fold into the equation. It's not just one thing. Over the long run, whether you pay a nickel more or pay a nickel less and you have a little bit of equity, I think it's almost equal. I mean, I think it's like 6 of one, half dozen of another. I think it's very, very minimal. If you're applying the right strategies, and that's the key to me, and you're looking at trades not as how much I can make or how much I can lose. I mean, I can't tell you how many times customers say, well, I'm going to do this strategy, and if I make $1,000, I'm going to get out. And if I lose $500, I'm going to get out. And
they're just naked long or naked short, and they get shaken out. You should do everything by price. And to the commission fact, you've got to really factor in all of the other services that you get and the brokerage firm provides for you.
Yeah, and I have to agree on that. I mean, I don't know how other brokers do it internally, but I work on the execution desk. And once the order goes to a route preference, we monitor the orders manually at OX. So whereas at another firm, it may be a machine, or they may just let it sit on an exchange once it reaches its final destination or wherever the smart router sends it, we try to leg spreads. You know, is it better to have, you know, this super cheap rate, or, you know, get your spreads done cross exchange? Same token. I mean, a lot of times the bid and offer is kind of skewed because BATS will throw up one lot at a certain price, and then everybody else is, at another price. But I mean, we do a lot of manual review as far as where we send our orders. The order preference beyond the smart router is we do an NBBO review where there's another guy on the execution desk, myself, and we basically call up the exchanges and we become the biggest pest they've.
Correct me if I'm wrong. The brokerage firm doesn't get paid unless the order gets filled, right?
Very good point.
So the customer, as a brokerage firm, and again, I don't represent a brokerage firm. They want you to be filled.
Yeah.
I mean, there's no. We're going to turn off your mic. No, I'm just kidding. Go ahead.
I'm here to. So
20 games under 500, right?
It's the only hat I had. So to your point, and that they want me to get filled or they don't get paid.
Right.
What's strange to me is why they use BATS so often then.
We have to talk to your brokerage firm.
We won't use, but so think of that. If you want me to get filled, then don't send it to BATS.
That 40 cents is pretty tempting, I think. On
And not only that, but I mean, a lot of times because they have Timber Hill and they make markets, so when they do price improvements, they happen across those trades on BATS because they get the rebate.
Right. Yeah, I mean, there's Timber Hill, but
the profit margins are so thin at brokerage firms at this point. I mean. And again, only because I've been with brokerage firms for many, many years. Again, I am not with any brokerage firm now. But the profit margin is so thin at most of these brokerage firms. Really, if we're worrying about, as retail investors, if we're worrying about commissions and the guys on the floor, the market makers and the traders on the floor are paying a higher commission rate than we are, then that's not our problem. It's probably the strategies we're using or the products that we're trading.
Well, and like I said it kind of a little while ago is... it's hard to. You can't blame these guys for trying to go where they don't think they're hurting the customer and where it could possibly benefit them a little bit.
I'd be doing the same thing if I was on the other side. It's just trying to figure out how do you work within this system to edge for me. Because you know what? I don't care whether the broker makes a dime or not.
Right. No. 100% agree. Listen, this is not an easy game where everybody would be doing it. I mean, I'll make an argument that, all the wealth is made by 5% of the people. And the other 95% either get along or don't make any money. And it's just because they're not, again, they just using the right strategy and trading the right products is going to put you head and shoulders as a retail investor above everybody else. I mean, if you can buy, again, I'm option heavy and future heavy, so I'm just going to go to my forte, and the rest of the guys on the panel have their forte and their good points about the products that they trade. But if I can buy something, and I'll go back to XLF, and I'll go back to XLF today, and I don't know where it closed, but let's say it's around $15.20. If I could buy the 14-15 call spread in August, let's say I'm bullish on XLF, and I can buy it for 75 cents. I'm buying something intrinsically for $14.75 that's trading $14.25.
Right, which point you just want to get filled.
Which point you just want to get filled, and the market's 1 penny wide. I mean, the difference between buying something 1 penny wide. But I'm buying something that is, if the stock doesn't move, remember I want it to go up, I still make money. And if the stock goes down 25 cents, I still make money. I want the stock to go up. I mean, that's the type of strategy as retail investors, and that's a very simplistic strategy. There are many, many different strategies. But that's the type of strategy that you should be using. Does that make sense?
Tony, you're such a wallflower here on the panel. You know, I feel bad that we brought you on. We're not giving
and
you
by the way, my
red meat
acronym on the floor was bad. So every time you guys say that, I'm always like looking over there. So
no, I mean it totally makes sense. It just is more difficult if, say, you find a couple strikes that, based on your calculations, look mispriced, and you want to sell SKU or buy
That's
SKU.
because there's a one contract somewhere on some exchange that every other exchange won't honor. And you are doing your homework, and you are doing your due diligence, and you are 100% correct. But that's the nature of the beast.
Right. Okay.
I think your point about commissions was a salient one, though, too. I mean, because people come to us a lot always complaining about various aspects of different online brokerages. Why are commissions so high on this? Why are commissions so high on that? And they will migrate, the less savvy of them will migrate towards a more commission-sensitive broker. And I think there are aspects of your trading like this in spread execution where you can expect certain things from a little bit higher commission level that will go to having someone like Rob sitting there to watch your spread execution. And when your spread is essentially in limbo amongst multiple exchanges and no one will honor the NBBO, they could step in and do it, or you can do it for you. So I think you can expect a certain level of execution on some of these multi-leg trades where is commensurate with your commission level. I'm not saying you have to go out and be crazy full service broker, but
no, and that's where OX is going to show their teeth. Just listen to Tim. You're going to be able to call him up and he's going to say, "Hey, I've got a great idea. Instead of buying back your butterfly, why don't you just buy back the straddle and leave those longs that have no value left on?" He's going to say, "Oh, why don't if you give me permission, I'll just leg it here and leg it here, or you guys will." And I'll put together the whole trade for you if you're willing to give me that kind of license, discretion, and that's where that value added comes with a firm like OX, where they're going to be there to not handhold, but clean up the messes a little bit when you get stuck.
There's a brokerage firm,
and be really good looking.
There's a brokerage firm that charges 0 commissions. So, a lot of times...
They still do that with options or just for stock, I think?
I don't know what it is, but someone will say, my commission is high, and I'll say, well, there is a place with 0. I think that's really the place you ought to go, it's exactly correct. I have had customers
What is the name and website of that brokerage firm? I'm just kidding. I'm just kidding, folks.
No, I have had customers leave, and say, well, I can get a much better rate, and yeah, it's really not much of a difference, but they'll be back in a few weeks and they'll say, it's terrible because I can't pick up the phone. I can't get somebody on the other side who will, help me through this. And
some of this onus is on the retail investor too. I mean, we can't always, listen. You most retail customers, from my experience, trade too large. Okay, but they don't trade often enough. Like I think the average, at least from
that sounds like a broker there. They don't trade often enough.
No, but they trade too much.
But they trade too. No, they don't trade enough. They trade too large. Like they'll put on a position all in. As a market maker, I rarely put on a position all in at that one price. I level in, and if I miss it because I bought only some and it went much higher, well, that's a home run to me because I bought something and I wanted it to go higher and it went higher. Most retail investors, I think the average is around 7 contracts and options and 700 shares of stock. But yet if they go trade a future, they'll do 2 futures, which is significantly more risk than 7 contracts and 700 shares of stock, and then wonder why they get shaken out. I mean, so you have to learn the correlations and learn what you're trading. I mean, so some of it is there. And again, commissions, you can debate them forever. And I will say that, in my humble opinion, it's just Tony Batista's humble opinion, that commission rates are probably not going to go much lower. And my argument is the guys on the floor pay more commissions than you do. So,
it was insane. I left the floor in 2009, and on top of my regular commissions, I was getting a bill for $15,000 a month to pay firms to route orders to me. Correct. My commission on a given month to trade actively was, if I was really active, so if I had a million plus haircut, I was paying $50,000 in commission, and not including my seat lease.
Sure.
And that was to get the bid-ask spread. And now, when I
which
looked
is
at
which
09,
is
we
about
still
as
had-
what,
we
which
still
is
had
about as
nickel
tight as it can
options.
be, right? I mean,
We still had nickel options. Then
Well, I remember where they were teenies and eighths.
Yeah,
so.
well, and I remember being insanely jealous and still being insanely jealous.
Understood.
Yeah, no, but no, but yeah, I mean, it's commissions are really, really low, and if you want to be able to route where you want to route, you have to understand that your broker is giving up something to give that right to you, and that's just the way it is. And if you need that type, if you want to get your order executed better, hey, either route it to the exchange, call up Tim Navabi, crazy Rob Kurzakowski, or Big J here, and they'll take care of business for you, but it's just going to cost you an extra penny.
I think that's going to do it for the Tony Batista block, a.k.a. the Express block. I'm glad. Honestly, I love it. I'm glad you chimed in. But before we go, Tim, I know you had your mega selection of common customer questions. Why don't you give us like your one favorite there that you hear often enough and it just drives you crazy and you want to rectify it now on air for all time?
Well, let me just kind of summarize. I think because it is kind of the two that we talked about mainly was, how come I'm not getting, excuse me, I'm just going to summarize sort of the two big ones, which is commissions and spreads. You set up a trade, you do your research, you're about to place the trade, everything looks great. All of a sudden you notice the commission is not right. A lot of times people have, several accounts that run brokerage, and on one account they have a commission that they're very satisfied with, but maybe on their IRA that they don't. So I like to tell people, look, if you're going to change a commission, if you're going to negotiate a commission on one account, make sure it's done on all of your accounts. That way, it just sort of is you're not going to run into these sort of problems or surprises. And the second is, on a spread. Take a look at all of the legs. If you're not getting filled in a minute or two and you can't understand why, pick up the phone. Call the broker, ask what's happening. Those are pretty much the main two.
Those are your main two? Well,
yeah.
Well, thank you for that, sir, Mr. Navabi, Tim, the lady killer Navabi here. And with that, we're going to close out the old Express block and roll right into the strategy block.
The strategy block.
I'm sorry, no.
It's been on the show for about a year. You guys don't obviously listen.
I hear. I always go, Tucson's talking.
Tucson section. Fast forward. No.
I have the pleasure of you're going to be shocked, but I'm here for most of the shows, so I tend not to listen to the whole thing. I do, but I actually do catch portions of every show because there'll be points where maybe Tim Navabi says something really inappropriate, and I want to see whether it makes it into the show. And so I listen to every show
because Tim's the one who keeps the others busy. It's Tim. It's all
I want to
Tim.
I want to know whether that inappropriate thing that Rob Kurzakowski said, that crazy, wild, insanely hilarious comment, makes it onto the show.
Well, we are here in the strategy block, and as the Seabass alluded to, this is the portion of the show where Uncle Mike takes over and discusses some intricate option strategy or technique, and he has steadfastly, doggedly, determinedly refused any and all of my questions to say, what the heck are you going to talk about on the live show? All he kept telling me was bonds. So apparently we are in for a Bondapalooza from Uncle Mike. So Uncle Mike, by all means, take it away, sir.
All right, well, I'm excited to be on the strategy block as always.
And I'm sure you love your theme music, too. That's just for you we do that.
Did you know that was your theme music?
I knew it was my theme music,
right,
yeah.
nice.
He listens to his
It usually
segments.
doesn't last that long, though, on the actual show, though. They usually cut it out a little quicker, but...
You know what? Can I get some theme music when so that people know they've cut something I've said? Like it's just like we talk,
something like
some theme music.
Like the Price is Right when you the Price is Right
again?
when you overbid or something like that.
Yeah.
There we go. Yeah, that'll be it. There we go. All right, Uncle Mike, we've derailed you enough, sir. By all means, bonds, sir.
All right. We get questions from clients a lot of times with the concern that, you know what, the S&P 500, it bottomed out at 666 a couple years ago, and now we're around the 1,300 mark, and don't know if I'm really wanting to get into the stock market right now. Also, if I put my money into some type of a fixed income strategy, well, there's not a lot of things that are paying a lot right now. So what we like to tell people, look at the relative risk that's involved. We have a bond wholesaler that we work with, and to give you an idea of it, I pretty much drive her nuts because I always repudiate pretty much everything she says to me. But one of the things that they're talking about that's becoming kind of the rage right now are Brazilian bonds. Interest rates are fairly high in Brazil right now. And with that, the thing that you need to keep in mind...
There's other things that are Brazilian that I like better.
Than the bonds. I figured you did.
Just saying.
But with that in mind, you knew I was saying. You figured that was walking into that.
All three of these guys looked at me and said, you got to say it.
Yeah. I figured, I should have known better. Just don't talk about natural gas around them. That's the bad part. But anyway, with that in mind, you need to understand the risks that are involved with bonds. Number one, they really don't pay a lot right now, and the ones that do, there's bonds that yield close to 10 to 12% right now in the Brazilian corporate bond market. But you need to factor in the fact that you have the risk of the Brazilian real. You have a lot of risk that's going on with that. So what we like to tell people is that, is the risk worth it? So for example, the U.S. Treasuries right now. Well, are we going to default because of the debt ceiling? Who knows? That's a topic for another day. But the point is it worth it to park your money in something that's going to pay 25 basis points and have that be considered a safe thing? Well, maybe if it's a savings account or something along those lines, but like the 30-year Treasury, does that make sense to tie up your money for 30 years for a 4% yield on it? So with all this going on, you're not comfortable putting your money in the stock market. You're not comfortable putting your money in bonds per se because of a lot of reasons. What can you do? Well, I have a strong belief that options can play a role in the long-term portfolio. If you buy a put on something, you know that you're not going to lose more than X. You know that you can customize your risk. Now, whether it's in the stock market, whether it's in gold, whether it's in oil, whether it's in natural gas, you can pretty much participate in anything right now because of all the products that are out there. So what I'd like to urge people to do is open your mind. Just because the financial planner tells you that bonds are a safe thing, relative risk is a lot different than real risk. A lot of times if you look at risk calculators in the financial planning world, it'll say this is the projected loss on this bond. Well, bonds can default. And you need to really understand what the real risk is, not just the relative risk.
Hey, what are those like corporate bonds on like Petrobras that they're buying out there, or what?
Just companies in general down in Brazil.
Yeah, just any. I mean, I'm just kind of interested. I mean, I'm not too familiar with the only. It's funny. My dad was in fixed income for 30 years, and it is easily my weakest point for as a trader.
I'll put it to you this way: selling bonds is the play of the decade. All right, that's what I'll go on record to say.
Well, I was just telling this story earlier today. My dad tells a story that in 1982 he was on the phone with the head of investments for XX Bank, a very large regional bank that got swallowed by one of the ones, and he was telling the guy, 30-year non-callable 14%. You have to buy this. And the guy did.
Sure.
And then they went to 14.5. Then the yield curve was totally inverted. And the guy said, John, my dad's name, the guy said, John, you screwed me here. They're now 14.5. I want to roll into the 2-year that's paying 17. But Dad said, no. Just buy more. 6 months later, that yield curve, that 30-year was down below 10%. The guy made some money on his 2-year, but I mean, can you imagine getting a 30-year in 1982? Can you imagine holding a bond that was still collecting 14% today? I mean, think about that.
That's almost as good of a trade as old SIBO seats back in the the 70s when they.
I could buy some Greek bonds for that kind of yield too.
The gentleman who I think it was, I don't know, maybe it was the gentleman who left. He was talking about a stock that got down. I think it was LinkedIn down to $97. Mm-hmm. He was saying that when it was higher, and I'm sorry he left, and I want to talk about when he left, but I will since he's not here. He can't defend himself. He said when it was higher, if it got back down to 97, I'm going to buy it. And then when it gets to 97, you don't want to buy it. That is like a classic
Retail move.
Retail move.
Right.
It's the fight you have in your head as a retail investor, and it kills me. Now the stock went higher, and that's regardless. That doesn't make a difference whether the stock went higher. You would have lost money, make money. But now he's saying if it gets back to 97, I want to buy it again because it's higher now. You can't think like that. I mean, it is. I mean, we had a saying on the floor. It is what it is. So make your play based on risk, reward, and price, and I think this whole thing about the debt and the ceiling and everything else, even if we default, what does that mean? You're going to get paid next week?
Yeah.
I mean, we're not going to not pay. I mean, it can't happen. If it does, then
we'll print more money to pay it.
Well,
whatever the case may be, but that's not going to make interest rates go lower. Is my point? So I don't know.
And just to be fair to Tony, it's probably better off for Kavanaugh that he's not here.
Well, listen, them's fighting words to Auntie Mike.
That's why there's a two-sided market.
Yeah.
And that's why there's a tight two-sided market. I make my plays on my arguments and usually do a defined risk strategy. Now with bonds, you really can't be. If you're trading the bond future, there's no real defined risk strategy. With options, there are something like TBT, which is an inverse ETF. When bonds go down, it goes up. You can sell put spreads in there. I mean, there are many, many ways to play this. So, I just find a hard time finding the argument for why bonds can go higher, unless the market crashes, and I don't see that.
Yeah, and even then,
but that's my
probably
argument.
Better places to, if the market crashes, gold is probably a better investment than bonds. Even.
Well, that's what we've been doing for the past few years.
How do you buy a treasury here when they're paying nothing?
I don't know.
No, I'm with you, Tony. I would short even
if you
the
buy
bond novice.
If you buy the bond, and the bond doesn't move. There's cost to carry risk, right? I mean, it's a losing trade regardless. I mean, to me.
All right.
So from a fixed income perspective, does anyone have an opinion on sort of high yield spread against 5-year, 10-year, what have you? Because for a long time, what was it, 2-3 years ago, or about a year and a half ago? I mean, they were issuing these high yield bonds, having no problem placing them. So thoughts on sort of that spread?
I'll defer. I'm staying away from the long side of it for the most part.
You love the 30 years and all that.
I think it's going to steepen. I think that the long-term yields are going to rise. I mean, like they should. Yeah. I mean, in a sense, I do agree with Tony that the yields eventually will rise. I just think that is perception of pretty much 100% of the community right now that's trading this market. And then when I see that many people have that same opinion, I start to think that like a straddle or strangle position right now would be a good position
look at Japan. They've had rates shouldn't be that low. They've been that way for
10, 12 years.
So let's go to Japan for a minute since you mentioned it. Tsunami hits, a terrible thing, right? I mean, it couldn't have gotten any worse. My God, a meltdown in a reactor. It was the low tick. It was the low tick in Japan. I mean, EWJ traded $9.50, something like that. A day or two after that, it was the low tick. I mean, I don't know. I was always taught to buy low and sell high. And that sounds really, really simple. But you can't do that without being a contrarian. And you're 100% correct about, everybody thinking bonds, they can't go any lower, blah, blah, blah. And that's why you want to stay away from it. And I would agree with you if it was a stock. But since it's a bond and it has a... what would you call it? It has a floor to it. I mean, it can't go to -0. Yeah. I just think from a risk-reward basis, and listen, I could be wrong selling bonds, but from a risk-reward basis, I think my risk is 1 and my profitability is 4 times that.
So, what do you think about some sort of? Would you rather?
And listen, I could be really, really opinionated because I'm not a broker.
No, we love it.
This is my opinion and Tasty Trade's opinion and that whole thing.
You've immediately vaulted yourself into top 3 guests we've had. Just to let you know.
This is the good. I'm just enjoying it here. I can relax my voice for a little bit.
Yeah, so I'm with you on the short bond thing. Do you like buying TBT, buying calls on TBT? Or do you like selling puts? What's your approach?
Well, I'm a premium seller by heart, so I like to sell put spreads in TBT. That's my.
Now, can I ask you? So, in comparing, say, TBT, TLT, or the actual futures, do you have a preference? Assuming people have the right accounts, all that stuff.
Sure. I'll say it this way. when I am confident, which usually means I'm wrong, when I'm confident, I'll do the future because it's instant gratification, it's instant pain. When I really want to make a larger play, I think the leverage. And again, retail customers, when you're talking about leverage, you're supposed to. I mean, in 2008, everybody was coming out saying you should deleverage, right? I mean, you should not. Buy stocks on leverage. You shouldn't trade derivatives products on leverages because all hell is breaking loose. It was the absolute bottom. It was the time when you should have been leveraging. Now they're talking about when we're at these levels. Hey, you should leverage now. You should not leverage again. You have to use leverage in the right way. The bond future provides a lot of leverage. Instant gratification,
100
instant
to 1
pay.
almost. Yeah.
100 to 1. Yeah. You talk about options, maybe 10 to 1. This future's 100 to 1. Big boy product, big girl product. I understand it. So when I'm 100% correct, which means I'm usually wrong, I'll use the future. If I have an opinion on something, I like to go to the option. In TBT, it's around $33.32. I don't know where it closed. I was sitting down in this basement when it was closing. It's a little over $33. Selling the 33-31 put spread or the 33-32 put spread or the 33-30 put spread, however much leverage you want to get, allowing yourself for that product to move 3, 4, 5, 6, 7% in the wrong direction and still make money, it seems like a good strategy.
Well, the other thing, like if you want to do spreads,
and it gives the retail investor time to be wrong.
That's important.
Which gives the retail investor time to be right. And on the floor as a trader, we wanted, like I said, we wanted every customer to make money. We just wanted them to be wrong for that second. And most of the time, you didn't disappoint us.
Maybe take it one step further. Assuming that you are taking out the additional leverage of the futures, so you have the appropriate amount of cash to play the same amount of leverage, sort of gearing between the two. Do you like the futures options better? For example, just because you don't have, I believe if I'm right, the TBT and the TLT are sort of a blended duration as opposed to being able to play cheapest.
The liquidity on the 10-year note is pretty good.
But don't they kind of go to the cheapest to deliver so you can kind of figure out a little easier?
I listen, I'm an option trader by heart, okay? And I don't know if you want to say I'm an ex-professional option trader. I mean, I bought my seat the day of the crash in 1987. Okay, so my timing's not great. All right, so they're not liquid enough for me.
Okay.
The futures options?
The futures options on the bonds are not liquid enough for me. As soon as they are, it's going to be a home run product. It's just not liquid enough for me. And if it's not liquid enough for me with as many years of experience as I have, blah, 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 maybe just like the VIX, it's not the right thing for the retail investor. And which goes back to my point, the retail investor, not you necessarily, because I know nothing about you, but the retail investor is trading something that's too big for them, and they can't give themselves, they get shaken out too quickly. Fair enough?
Yeah.
Well, and I can tell you the liquidity is going to be in the bonds pretty soon because we're starting to see people.
Sure.
I'm just hearing my first inklings of firms that are doing the arb between TLT, TBT, TBF, and the options.
Those options are liquid enough for me. I was talking about the bond option on the future.
They're doing. That's what I'm saying is we're now starting to see people arb between bond futures option volatility and the equity volatility. So I think we're in the next. Yeah, the first firms are usually 2 years ahead of the entire market.
Okay.
I'm just thinking about the ES. Remember the ES big future swap? What did it take 2 years for everybody to catch up?
Yeah.
So I think that's you're about 2 years. 2 years away.
My biggest problem right now that I have with you is who are the other 2 or 3 guys that are better than me on this panel, a guest panel? You said I'm arguably the top 3. I want to know who the 2 other guys are.
I said top 3. I wasn't giving you a rank. You may be number 1.
Oh, okay.
All I was saying was top 3. All I was making was a win, place, or show bet. I wasn't making a win bet.
I like that. I like that.
That was a good save.
If I had to make a win bet, it would be on Tony Batista.
Tony, I'll just say you're making my job pretty easy today. I like it. I'm going to get you on loan from Tom a lot more. I'm used to having to pull words from these guys. So you're making it much easy for me.
It's always like, hey, Sebastian, would you please talk up?
Sebastian, perhaps aside. There we go.
One thing I do like to mention, if you do trade TLT, the monthly dividend is one thing that you do have to take into account, and especially if you get stuck in the money on the short call side, you're probably going to get assigned. You're probably going to get bought in on the stock. You're not going to be able to really ride that position out. That risk is pretty much eliminated in the bonds. The early assignments are really not that all that common. Just two things that you really have to kind of get familiar with if you are going to trade the futures versus the TLT or TBT is the inverse curve of the bond market, where the bond futures are trading at a discount. And don't be afraid to call down to the floor, because the versus cash guys down there, especially if you trade size, if you trade Tim Navabi size, we'll make a market for you. And if you give an indication, I mean, we call down there for clients that on the screen there's nothing. We RFQ the quote, and Globex they come back with nothing, and then you go down to the floor and they give you a 2-tick wide spread. So it's actually, liquidity is there. It's just you do have to call around. It's a little bit extra effort.
All right, I think that is going to do it for this extended but very interesting Tusaw Batista strategy block. And we're going to now
killing me, man.
roll right into Around the Block.
Around the Block.
We got some troopers here that stuck around for this whole. I mean, this is definitely our record show.
Oh yeah, we
holy
do a little over an hour, but
we normally
2+ hours.
Just let Tony know, this show is normally an hour and 5 minutes. We've been going at it.
Okay, I've been looking for my.
Before Sebastian gets edited out.
Yeah, that's true. Then it's like down to 30,
20 minutes.
32 minutes or so. But this is, of course, Around the Block. This is the section of the show where we discuss what's on our horizons, what's coming up in the near term from the trading and an options trading perspective. And it's earnings season again, which is nice. We've had not that much to talk about from Around the Block for the past few months, aside from what we've seen going on in the S, and are they selling premium, are they not selling premium, is VIX moving accordingly, and what's the old CBOP doing? But now we actually have some earnings coming out on Tuesday, a big day on Tuesday. We've got Amazon on the 26th, and we talked about Apple last week. I would argue that Amazon is also up there in that rarefied strata of tech high flyers that are actually doing a lot of interesting stuff. They have plays in everywhere, streaming music. They have plays in the old online retail. They have plays in online storage. They run a lot of the back ends for a lot of the websites on the web that we don't even know about. So Amazon, an interesting one on Tuesday. We also have good old Ford coming up. I know a big KYO holding. And there's some little brokerage firm I forgot that's coming up. But what's the OX something? What day are you guys again?
26th.
26th. You're Tuesday as well. So big.
Beep.
Big Tuesday. So you're expecting another crazy dividend on Tuesday, right?
No $4.50 dividends.
No $5 dividends coming out anytime soon. And of course, the big one you guys like to play with a lot is Netflix, which of course lights up your tape quite a bit. So we can just dive into any one of those ones you want to start with. I know Tusaw, you've been playing on Ford pretty actively. You still rolling calls now that it's down below the
rolled out of them. Just bought out of them. Bought out of them at like the single cent levels. I forget where it was exactly, but for now we're just long the stock and
okay.
Just holding it for the long term, hoping to eke out some premium while it's going through this.
You're not doing any more coverage into earnings or anything like that, or
just long the stock.
Okay.
It's very boring.
It's very boring for you. I'm looking for some ratio stupid to the downside on the puts, some of that to hedge the stock or something like that.
Yeah, I'm disappointed in myself. I need to start doing it.
You've shamed yourself, sir.
I know.
And then how about Amazon? Amazon's a little bit of a high flyer for what you guys do over at KYO, but I mean,
yeah, not an Amazon right now. Apple gives us enough. Keeps us
Apple's
up.
probably
that's enough for us.
High enough flyer.
Our clients would get scared of it. They're afraid enough with Apple, I think. But yeah, we're good.
And actually, I think that we've talked about this on previous shows, and I think Netflix is still too pricey for it. But
even after all the recent hubbub and corrections and everything,
with Netflix kind of streamlining their business and actually moving away from. They're trying to move away from DVD and Blu-ray. They're trying to get into pure streaming content. That's obvious with the rate or the hike in the monthly rates, because people basically sit on those CDs. I've had a movie at home for like 3 months, but that makes them more attractive.
What movie do you have? Is it Transformers the movie, 1986, where Optimus Prime dies for the first time.
A fine film, sir.
Had to get that in.
But
Applause from the audience.
The most horrifying film I've ever experienced in my life.
All the things we've said over these 2 hours, no applause. We get applause for the Transformers, the movie line. There we go. That's our
That was
audience.
just I still get nightmares.
No wonder why Sheldon Napeberg walked out on us.
No Transformer references.
No.
But I think that we are finally moving toward the imminent. I think Netflix and Amazon merging makes the most sense, because I think that the big three, cell phone / tech companies, Google, Apple, and Microsoft. I forgot about Microsoft there, but
a lot of people have, I think.
but I think that Netflix really doesn't fit into their business model. I think that Amazon still does, and the amount of server capacity and everything else that Amazon has, I think that Google has recently been stealing their thunder. Google Music, other things. I think that Amazon really does have to move into that streaming content.
Well, they have that Prime streaming now that you can get little one-off shows.
What did you say?
Prime, oh yes.
Would you call it Optimus Prime streaming?
I don't know if it's that level of quality streaming yet. Maybe it's more of like a Rodimus type Prime.
Rodimus Prime.
That'll be your minutia for the day.
Yeah, there you go.
But
let's stream and roll out.
Their current streaming offerings, they're not going to challenge Netflix anytime soon. But do you think they're going to? Do you think they'll eventually go after Netflix, even at these lofty valuation levels?
Well, I don't think it's going to be as much of a buyout as a kind of a stock swap merger. It makes sense for both of them, because they're up against giants, and for them, you're dealing with three companies that have the means to just out of nowhere come up with a new product that will directly compete with yours. You have to buddy up and get bigger.
Do you think Amazon can't go it by themselves at this point? They're too small to compete with like a Google?
Well, I don't think that they're too small to compete with the Google, but I think that Netflix at these levels is just too inflated for them to.
Well, yeah, but Amazon's beaten the. Apple came out with their Apple Cloud, and people sold it off because Amazon has such a ridiculous position in the storage and cloud area where, Apple was going to use Microsoft's cloud, is my understanding. They are using. Says the other panelists from the panelists from the audience.
Guest panelist. We might need 2 prizes for you at the end of the day.
I'm going to bring him on one of these.
Yeah. He might be our number 2 ranking of guest.
So I actually Netflix is this.
The Widowmaker.
Yeah,
definitely, yes.
Netflix, I can't tell you how many times I've shorted Netflix and got burned. It to me, I don't know. Again, I guess I'm a little opinionated about everything.
Why we like it.
We wouldn't have you any other way, sir.
Its business model is not sustainable, period. That's just the way I look at it. I remember when Blockbuster was the king of the hill, right? And Netflix took Blockbuster down. Now they get so arrogant. When a company gets so arrogant, when it was trading around, I don't know, a little over $300, they came out and said, you know what, we're going to raise our rates, and don't worry about it. I think the CEO or somebody came on TV and said, it's 2 lattes. That's, it's 2 lattes a month. Don't worry, eat it up. That's a public record. That's what he said.
We both canceled right here.
Did you? Yeah, and so did everybody in our audience. Yeah. And that's the day we sold the 310, 315 call spread. It was.
And did you drink a latte while you were doing it?
Isn't that arrogant? First of all, this is your company. How do you say that to your customers?
I'm now mimicking drinking a latte. Sold.
Yeah, you'll be fine. Listen, you can finally put a fork in Netflix. It's done.
So that's your call, huh? The short the upside. Are you?
I don't even know where it closed. I don't know when the earnings. The earnings are coming out on the 25th. I'll be on vacation in Mexico when the earnings come out, but you can put a fork in it.
Oh. Someone had told me, or I read online, that Netflix literally makes up 2/3 of all internet content.
Yeah.
Or I'm sorry, all internet traffic. And with there was some legislation coming out earlier around net neutrality, and if they allow Comcast, AT&T, and other folks to basically charge the large content users, i.e. Google, Amazon, whatever, to get premium routing, that's going to really hurt their bottom line. And I don't think anyone is pricing in that sort of legislative risk.
What is your name, sir?
I'm Marcus.
Marcus, I couldn't agree with you more. I had a customer send me an email saying that they have a FedEx mailbox, a regular mailbox, and now a Netflix mailbox at their local post office.
Right.
To me, there are these events that happen that kind of capitulate why things, what people look back and say, this is why it happened. Well, it's going to be the same thing with Ken Griffin talking about, financials and this stock, needs to fire their whole board and blah, blah. Same exact thing is happening now with Netflix. You get so arrogant and so it's not sustainable. I couldn't agree with you more.
And their subscription change fees is really attempting to push people into the streaming thing because they don't want to deal with the post office, which I think they're also the post office largest customer, and the only reason the post office doesn't go bankrupt.
Well, post office bankrupt.
True enough.
I am not. By principle, I cannot be a Netflix customer, and I've never been a Netflix customer because I lost too much money in the stock when it was going up. But
Netflix doesn't deliver Betamax.
100% correct. The guys that canceled. Now, do you use Redbox now or something like that? What do you?
No, I pretty much I just stream everything.
Yeah, we stick with the streaming cancel but we do Redbox, and I know a lot of people
borrow
buy
it off the
Coinstar.
internet.
Coinstar, right?
Yeah, we actually video on demand from like Comcast and some of that other stuff.
We actually did a pairs trade on Tasty Trade and we do it live, and all this stuff is live. We do it all live, but we did a pairs trade where we sold Netflix and bought Coinstar. Just to make, a correlation, this is why we're doing this is why we're doing that. And they're not going to run the opposite of each other, and they're not going to probably go together, but this is why we're doing it. I mean, it just seems like a better model.
It's been working all right so far. The Coinstar it's vacillating a little bit, but it's still to the upside.
We're out of it now.
Was that a Tasty Trade on Tasty Trade?
That was a Tasty Trade on Tasty Trade, 100% correct. That was one of our trade ideas. Yes.
John and Tim, are you guys still seeing the flood of downside premium sellers come into OX on Netflix ahead of earnings, or have people finally been bitten enough times after the thing moves 15, 20 plus handles after earnings to what are you seeing out there on the old OX platform?
Yeah, I think people really have been scared out of Netflix.
They got burned too many times like Tony?
It's the Widowmaker.
I don't see too many people like I used to. It's kind of a desert now.
Yeah, I've always talked about Netflix. I love bringing up the chance to talk about 80s movies with Sebastian Seabass here. Any chance I get to talk about what's in your queue. I bring up Netflix, but I think Netflix was a sector leader. I think I've always been bullish on Netflix. I said just buy it on dips. I think I've talked about that for the last 3 months. And I had to agree with Tony on Tuesday. I said, short corn, long the market, and I'm done with Netflix because I actually felt like a personal hit. I'm like, you're pretty much raising my premiums by 60% here, and you're not giving me anything else.
But at least throw me a bone, right?
Yeah.
Do something right. Give me something for the 60%.
Right.
I'm glad to hear you guys were doing, the bear call spread, and also smart enough to look at Coinstar, who's a direct competitor, is going to benefit from this. I think, honestly, you're going to see a nice bump in Netflix when earnings come out. I think it'd be a great time to sell more call spreads or even buy some cheap puts, because I think you're going to see a pop for 1 to 2 days when the what's another word for retail? Run into it to get into good earnings, and follow through, and then I think it's going to continue its downtrend.
We catch a lot of stuff on now that I moved over to execution, and we catch a lot of stuff on the back end where John and Tim are mostly talking to customers and kind of seeing that order flow, and we see the spreads that we're legging, and Netflix used to be one that we used to leg all the time, and I don't think I've legged one in a week. Just because people have been getting burned. We've actually seen a lot of people move to the indices now that they're tired of trying to pick a stock because the hot sector is rotating so fast.
Yeah.
Well, one of the things I was actually looking at, I talked about this on my blog yesterday, optionpit.com/blog, was I pulled up Apple, I pulled up Microsoft, pulled up Intel, I pulled up Google. They're all sitting at or near not just their 52-week low vols, but their 104-week low vols. Meanwhile, the NDX is somewhat elevated to elevated. there's a pairs trade there in developing kind of a quasi-index of these big stocks and just unloading NDX premium.
Or if you're looking at it, if you're a premium buyer, you might want to do it in the individual stocks, and if you're a premium seller, you might want to do it in NDX.
Yeah.
I mean,
either or. NDX might make sense as a condor strangle type trade, and if you want to buy straddles, Apple, Google, IBM, you name.
Apply the right strategy to the right product, and then give yourself room to be right. That's it.
Couldn't agree more.
Listen, it's a zero-sum game, and if something's inside a standard deviation, the buyer and seller are both going to be right at some point. So, as a retail investor, give yourself enough time to be right, and then trade the proper amount of shares or options.
All right, I think that is going to do it for this the Around the Block segment. And it's also going to do it for this extended but extremely enjoyable live episode of the Option Block. And I want to thank all of our guests for coming out, all of our people here for coming out. This has been fantastic. Got to thank Big Rob over here. Got to thank the Lady Killer, Tim Navabi. Got to thank John 5 Pints Deep Grigas over here. Got to thank Mr. Sebastian, Mr. Tusaw, Auntie Mike, who had to leave us early, and of course Tony the Wallflower Batista down there. I love it, Tony. You made my job very easy today. It was fantastic. I love it. We don't have to borrow you from Mr. Sosnoff, I think, more often. I'll even wear the beret if it'll make you feel better.
See, you don't miss him anymore, right?
Tell him he can have dental surgery whenever he wants. Just get me a beret that fits nice XL or so. I think it'll work. But I think this has been fantastic. I hope to do this again in the near future with more of these live events. And I want to thank everybody out there for downloading and streaming and subscribing to the show and making it such a success. And of course, all of you came here and stuck it all the way through this extended show and made it in our live audience.
We had a really big audience there for a little bit, and then as the show, it was weird.
It was like a 3-hour show.
It was kind of like a big wave. We had it was. It was like we had small at the start, big, little smaller, bigger again.
Well, that's why we made it 3 hours. I want to make sure we could accommodate everyone's schedule.
Exactly. But that was great, guys. Thank you so much.
Well, thank you very much for doing that, and we'll see you here right again next time, right here on the Option Block.
The Option Block. All right.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.